Morning all. How are you all doing? Morning Raju. Morning John. Morning Big Papa. How's everybody? Everybody have a good weekend? Morning David. Anybody get up to anything exciting at the weekend? I was nursing my poorly arm this weekend. Didn't do anything exciting. Morning Adrian. Morning artificial stupidity. No such thing as artificial stupidity. You create your own stupidity. Morning, Andrew. We've got 10 minutes to the market open. So I thought I'll whiz through the news so far. We've had some news this morning already. We've had CPI figures for the Swissy. For those of you that were here on Friday, I started a Fidelcrest evaluation on Thursday, just to test them out. Morning, Diamond. Just to see what they're up to, what they're like, what their execution's like, etc., etc. So I've just taken a short on CAD Swiss this morning because we obviously had positive Swissy news. So if we get an ADR hit on CAD Swiss today, that'll be the evaluation past phase 1 anyway. And then we'll have a look at phase 2. But so far, pretty impressed with Fidelcrest. Also, morning it's time. I've been looking at the fivers over the weekend because they've completely revamped their entire offering. They were crap. They were awful. But they've revamped their offering, which actually now doesn't look half bad. So what I might do is start an evaluation with the fivers as well, just to go give them another try. I haven't. Did I get funded with the fivers? No, I didn't. I didn't try with fivers because they just were not as good as everybody else. So, but the new offering they've got a, funnily enough, they've got something called a bootcamp. The 5%ers, is it? No, is it the fivers? Yeah. So yeah, they got this new program called Bootcamp. And basically, it's only $95 for 100K or $225 for a quarter mil. And it's a 3-stage evaluation. So basically, they give you 25K, they give you 50K, and then they give you 75K. There's no limits. There's no lower limits. Only 1 to 10 margin, though. So you can't take too many trades with it. Yeah, once you get it, you go into a scaling plan, obviously. But I mean, the scaling plans, as you know, as I keep saying, scaling plans are pretty bollocks, basically. You won't scale it because you won't hold the account long enough. But 75% split now. Used to be 50% split. That's the reason I was like, well, what's the point? Everybody else in the industry, literally every other prop firm in the industry, is a minimum 75 to 80% payout. These guys were 50%. So it's like, well, they're just never going to get anywhere. So there's only people that hadn't found other prop firms that ever used them. But they've moved it up to 75. And now, if you could scale it, you get up to 100% split, but you're not going to get there. So yeah, I might give them a go because it's $95 basically, and it's a 3-stager. And the thing that I like about it is there's no minimums on it. So basically, you would compound it. So going with like 3% risk per trade using H1 or H4, and just go for 1.5 hour. 3 trades, you're done. So yeah. Anyway, look at that another time. I'm just sure what the CAD Swiss is up to. Morning outro. Live trade account straight away. Yeah, you can go straight into them live as well. It's expensive though. I mean, it's bloody expensive. If you this can't spell. There's no point in using their live. Their instant funding option. It's just it's so unbelievably expensive. It's $850 for a 40K account, and you actually only get 20 on to start with. It's just that's nuts. It's way too much. Way too much. I can go to E8, get 3 50K accounts for the same price, right? And be guaranteed 100K within 24 hours. Why on earth would you spend $850 to get a 40K account? It's just it's a lot, and the payout's rubbish. If you manage to scale 10% profit after, and, you know, if you manage to get 10% profit, you would get up to the 75% payout. And then you've got to do 10% before you actually get to anything decent. You know, it's just, you got to hold it for 3 evaluations. It's just not going to work. It won't happen. Just won't happen. Come on, CAD Swiss. Right, so let's quickly whiz over the news before the market opens. We've got 5 minutes. So yeah, we got PMI for these for the CAD this afternoon. It's the IV PMI, so it's not really that important. So there's no other news today, really. We've had the CPI this morning. That's the main thing. Tomorrow morning, it's the biggie. We got the rates for the Aussie. They are going up 0.25. So a 0.25% increase, which is what we expected. We'll also have the forward guidance as well. So big one tomorrow morning. If you've got any Aussie dollar exposure or New Zealand dollar exposure on, you need to be aware of that. It's going to be big moves on that one overnight. We've got Powell tomorrow afternoon, followed by Jordan and Lowe. So basically, we've got the Aussie dollar news, then no other news but talking heads. Then we go on to Lagarde speaking on Wednesday, followed by non-farm employment. We've got the Canadian rates. That's going to be big. Obviously, they're expected to freeze. Be interested to see what happens with their inflation figures, but yeah, they're expected to freeze the CAD. We've got Powell talking again. Then we've got Jolts. So big day for the CAD. And potentially the US on Wednesday. Nothing on Thursday. And then Friday, we go straight into the Bank of Japan. That usually comes out somewhere between 3 and 4 a.m. UK time. Bank of Japan monetary policy statement. So that will be what we're doing with the yen moving forward. We're waiting for an announcement on the yen. There's talk of them doing interest rate rises for the first time in many years. So that'll be interesting when that lands. GDP for the pound at 7 a.m. on Friday. Then we've obviously got unemployment, or everybody calls it non-farm payroll, but it's the unemployment figures on Friday. So COT report over the weekend. We had a shift in COT. We got the new COT report, but the COT report is from February. So CFTC released an update, which is all updated on this website. So everything you see on the website to do with COT is all up to date. But we are only getting the February the 7th figures at the moment. So we are still pretty much a month behind. They are speeding it up. They reckon by the middle of this month, they will have, which is next week, basically. So they better hurry up. We'll have everything back up to date. So I'm expecting a flurry of information coming out of CFTC this week. COT has changed slightly. So you remember last week we had pretty much all 4s or 0s. We've now got some 3s and some 1s. Yeah. So there has been a change in COT positioning ever so slightly. So some of these have been affected a little bit with COT, not massively. But we've got some slightly weaker figures, slightly less on the pound, US dollar ever so slightly less. But again, remember, this is a month old. And a little bit of jiggling, not a massive amount though. Euro still massively long, waiting for Lagarde to drop something. Everybody's everybody's short on the Swiss. Aussie dollar Swiss. Long rather. Everybody's long Aussie dollar Swiss. Everybody's long CAD Swiss. Let's go the other way, boys. So yeah, everyone's getting run over on the Swiss franc this morning. That's about it for the news. We've got 1 minute to the open, so let's have a look at the open. DAX, your pre-market 15 is there and there at the moment. We've got 12 seconds to go. Just quickly watch the open. See what happens this morning. As your pre-market 15 short. Pre-market 15 is 30 today, so you're looking at somewhere in the region of 45 for a 1.5 hour return, which is just below that propulsion gap. See if that gets a runner this morning. What news have we got today? We've got nothing else, have we? This morning. Finance reduce over the weekend. Not a lot that I could see at all, really. I don't understand the case for a pause in rate hike. Yeah, it's just barking, just saying. Some people have been mentioning that they should stop the rates because Canadians are doing it this week. So it's not going to happen. They're going to put more inflation, more rates. So there's nothing over the weekend that we need to consider from a news perspective. They're doing instant funding now. Good idea with the Fivers. Good company. I use them for a long time. Very, very good. Yeah, well, Fivers were one of the first. I mean, they were first. I don't think they were first to market, but they were one of the first to market with prop. But their offering was terrible. So as soon as somebody else came along, everybody jumped ship. Updated their challenges yesterday. Yeah, that's what I've just done. Updated. Just check them out. What's the spread like for the five? I don't know. I've never used them. No idea. Come on, let's get ADR. Let's just have a quick flush. 10 points, that's it. Just a quick quarter of an ADR. Pop down there, get me over the line on this Fiddle Crest evaluation. I should be very happy. Platform's frozen. Let me just get my other bad spread on my Forex fund this morning. I haven't got my Forex fund one open on here. Is it bad spread? Might be light liquidity. We're certainly not going very far, are we? So it's pretty dead at the moment. Friday, I don't know what happened on Friday in the stream I'm talking about, but on Friday we had at one point about 75 people in the live room, which was amazing. So if you can get a chance to hit that little thumbs up button, that would be much appreciated, because I get the feeling, because I was looking at the statistics and we had quite a few extra people in there and everybody hit the like button. I had about 30 or 40 likes on the stream. And I think that's what boosts it up the rankings. I don't know much about the algorithm in YouTube. Never paid any attention to it. But yeah, got loads of visitors on Friday in the stream. It's the most we've ever had in here, 75. So spread the word. Oh, that's it. Go on, hit the thumbs. Hit the thumbs up. It's 11. Come on, let's see if we can get it up. There's 42 people in here. Let's see if we can get up to at least 20. DAX. What the hell? This Forex. What is wrong? I must change this platform. I keep saying it every day, don't I? The DAX is actually trading up here at the minute. This platform's froze for some reason. There we go. Weird. I suppose I could watch it in Fiddlecrest, couldn't I? Anyhow. I think the Fivers use MT5. Yeah, they do. That's the other downside to the Fivers. They only use MT5. They're the only prop firm out there that force you to use MT5. It's because they have stocks. MT5 is, you can trade futures and stocks in it. And I think that's the reason they are MT5, because of the spread of their instruments, which is annoying. But everything I've got is out for MT5, apart from the, some of the free indicators. So, but I don't, I don't position trade on my funded accounts. I trade differently. So a different style of trading really needed for those. Right, so the DAX pre-market, with just 17 seconds left on this candle. There's your 5-minute opening range. Very lackluster open this morning, 22 points. So it still looks bearish. If we have a quick look at the DAX, 20 likes. Well done, boys and girls and children and elderly people, whoever's in here. That's what we like to see. 20 likes. See if that boosts us up and we get like a flood of people coming in, because it's basically the algorithm, all the statistics on, I get analytics and stuff, and it basically said that the influx of traffic that I had was from the live stream discovery bit of YouTube. So it's obviously something to do with appearing higher up that live stream listing, whatever it is. I don't know. As I said, I don't really do, I don't do marketing and stuff. So anyway, 5-minute opening ranges in, as you can see. So there's your pre-market, there's your 5. Still looking bearish. So the DAX, we had a big run up on Friday. So we're coming off the back of a 2-day run at the moment. Back up above the highs. So if you remember, I had that control candle here that we looked at. And I said, right, well, we've now broken down below that, but we shot back inside. So there is a potential for this low to become low of range. Yeah, which was this candle here. Yeah, so that was our previous control candle. And then we had this breakout side. So we started paying attention to that low there. We rejected it on Thursday. Friday slammed out the highs, like properly slammed out the highs. So we are proper broken out now. So the volatility's come back in. This like multi-week range looks like this is going to be over. So the question today is, are we placing a false breakout drop, or is this a breakout? In which case we should be watching these propulsion gaps for retests to jump back in on a long position. So be interesting to see where we go at the open. At the moment, we have got no volume. So we're on an inside bar at the minute. So there's just no volume at the moment at all. So we'll see where we go. But the 5-minute opening range is smaller than the 15-minute pre-market. Yeah, you don't see that very often. It's very light volume this morning. I'm not quite sure why we've got such light volume. There's a lot of money obviously going through the Swissy at the minute. So just quickly looking at ADRs while we're waiting for the market to actually do something. Look at that for a clean dash, eh? No monthly ranges hit. Obviously, it's the first day of the week, and there's no ADRs. So I would expect to see this lighting up today with Swiss franc at some point. We've had a bit of a move on the Swissy, obviously, off the back of the news, but nothing dramatic. So I would expect some ADRs today on some of these Swiss francs. Hopefully, the CAD Swiss, that's the one I want to hit ADR because I'm short on it. If we can get an ADR hit on that, that gets me over the line. So I'm happy with that. CAD Swiss is range bound as well. So there's absolutely no reason why we shouldn't come back down and retest this. To do that, we need to hit that. So thank you very much. That'll be done. So yeah, we're stuck in a range on this one. So any ADRs that we get, obviously, you just play them short. Yeah, ADR, pop. So if we do get an ADR, potentially there's a little long there. Don't forget the CPI figures. This is a double-edged sword, CPI. So the inflation figures, when it comes out positive, is a short-term boost for the currency, but long-term it's not good because it means they need to increase interest rates to get on top of the inflation, which is going up. That in turn is bullish for the currency, but bad for the economy. So it all depends on what happens with their unemployment. And obviously, if you want to know more about that, if I stop going to my sharing page, you can look at the key fundamentals page on the website, and that'll give you all the fundamentals for all the pairs. And you can see interest rates, inflation, GDP, and unemployment, and obviously what the COP positioning is at the moment. So as you can see from the Swissy, the interest rates are very low, and we had a 0 increase. Inflation is going up, and obviously that's what we just had today. The CPI figures have come out as positive month on month. This is the quarterlies. Their GDP is flat. So we just need to bear in mind, obviously, is that right? GDP is flat for the Swiss. Is it really? Maybe it is. Don't know. Unemployment is very, very low. So what happens with the interest rates, obviously when interest rates go up, it tends to increase unemployment, which is why we had such a big, strong push on this one, because we had positive interest rate increase on the US dollar and the unemployment fell, which is unusual. So we've got increasing unemployment there. That's because they put their interest rates up. So these GDP figures just putting stress on the Swiss. But overall, it should be bullish, medium term as well. So I would look for longs or rather look for shorts, everything against the Swissy. Swiss yen's the only thing you can trade long for the Swiss. So anything you see against Swiss franc, shorting. What are you doing, DAX? Nothing. Inside bar. So there's your 5-minute opening range. Your 10-minute bar is inside 5. So this is your 15. So your 5, 10, 15 is your initial sort of cash balance, the initial orders going in. And after that, we usually look for speculative direction. But at the moment, we haven't really got any volume. So I wouldn't be surprised if we come up and retest these highs. We'll see where we go. So 5-minute opening range, just retesting at the minute, trying to break out. Not really succeeding. So WTIS looking real nice for short term. I've no idea what that is. Oh, do you mean WTI? You mean oil? Do you mean oil? Yeah. Looks pretty good for a short at the minute. I really want to long it though. I don't want to short oil. Friday was a short entry. And it's gapped down. So once we've filled that gap, that propulsion will get tested at some point. So yeah, nice short on oil. If we come up and fill that gap, that's when I would short it. Or if we take yesterday's high, it might just come straight down, but looks pretty good for a short oil. DAX is not going anywhere, is it, this morning? Right, let's have a look at the RSIs. So RSIs, there's nothing on the hourlies, on the 4 hourlies at the moment. So last week, if you look at most instruments from last week, we didn't get anywhere really. Euro Swiss is a good example. That was Monday's open. This is where we are now. We opened, so basically all we managed to do was that. Yeah. So we made what, 38 pips, less than an ADR. So virtually everything last week was less than an ADR movement in real terms. There's a few bits and pieces which pushed a little bit further, but it was a real up-down sort of week, as you can see. Everything's kind of flip-flopping around. New Zealand, Swiss, come on, get down, Swissy. So yeah, with the RSIs, basically all the 4-hour extensions that we had last week have all kind of played out, or they've gone into an accumulation and obviously just come straight back. But I mean, there was a 4-hour RSI there. That's a lovely little long. See, I had a little short in there, New Zealand US on the hourly. That was an ADR reversal, straight in, straight out, same day. But yeah, so everything's 4-hour is flat at the moment. So the only thing we can look at really is the hourlies. Hi Lee, guess what? You're the best. Thanks, David. You're the best too. Friday S&P closed bullish. Looks like a bounce to start testing the daily, swing high. Yeah, we'll have a look at the. Actually, let's whiz through the indices now while we're waiting for the DAX to figure out what the hell it wants to do. 1 minute left. There's just no volume. Nothing this morning. Dead. I haven't seen it open like this for a while. This is very, very, very quiet. Did anybody get long? Yeah, you would have got long. Oh, I don't know. I'm not in. 1.5. That hasn't got me in. That hasn't tagged me in yet. My entry's 1.5 away. So might get on actually with spread. Might have got in with spread. That's probably just about a long entry. Not going anywhere though, are we? Morning, Stevie. Right, so whizzing through the indices. So DAX, obviously, we are up at the highs at the minute. Yeah, so retesting the highs again. Looking at on the daily, obviously you can see what we're doing. We are literally range bound on this thing. There's your high. That's that high that we've just tested. So we're literally just sitting in a holding pattern at the minute. So the price action for the last 2 weeks on the DAX has been completely sideways within this control candle until we got there, that was Monday, wasn't it? Where are we? Friday, Thursday, Wednesday, Tuesday, Monday, Friday. So that was previous Friday. So massive move down that previous Friday. Monday, straight back inside the range, 50% of that candle. Flip-flopped about, came back down, retested the lows, weren't interested. Friday broke out. So today, I would look for some kind of retest. We've got propulsion gaps to the downside. If you look on the hourly, we've got this big boy here from Friday. So I would expect, that's been retested already. I would expect us to come down and retest this at some point this week before we go. So ideally today. Now, the question is on everybody's lips, is this the end of the bull market, the bear market? So when we look at the DAX, obviously, we still have not got back above those highs from November yet. Oops. So this is looking obviously very, very bullish. So the DAX, the European stock market is doing very, very, very well. If you look at the FTSE, which I haven't got on here, I might have the FTSE on here. Yeah. So if you look at the FTSE, that's been absolutely screaming up on the daily. So the FTSE hasn't just recovered. We made new all-time highs. Yeah, so this thing is absolutely flying. So the European markets are doing very, very well. Reason being is because the currency markets are crap. So obviously, with the pound being as weak as it is, that's affecting the stock market, because obviously there's an inverse relationship between the two. Let's get that back over the CAD Swiss so I can just watch this. Come on, CAD Swiss, don't be annoying. So yeah, so that obviously we know is very, very bullish. If you look at the US markets, however, we're not recovering at all. The Dow is the only one really that's actually making any progress. The smaller market obviously has less sectors in it, therefore it has more chance of actually recovering. But we have just double topped and we're stuck. Yeah, we've pulled back down. We haven't made a new low. So there's just no clues at the moment. We are literally just stuck in a range and not going anywhere. So we're bang middle of the range at the moment on the Dow. So this week, or I'm going to say this week, this breakout, whenever this occurs, is going to be key as to whether we break out to the upside or the downside. Currently, we've got a very strong US dollar. So it would be more like a downside break would be on the cards. When you look at the other indices, like the S&P, we're just putting in a new higher low at the moment. So the market structure on the S&P is just starting to get bullish. But and again, same with the NASDAQ, it's pretty much the same thing. So it is starting to turn. I'm not quite there yet with the S&P. I'm not ready to get my algorithms back on for my long only positions because I'm just not convinced. Market structure is beautiful, but market conditions, economy is not there yet. So I'm going to be watching this closely. If we break that high, I think then I'm going to start, right, yeah, we'll get on board. Because I think we're going to challenge that and then we'll just continue to grow. But it's going to need the US dollar, obviously, to weaken. So this week, we've got the unemployment figures. Now, that is going to be, in my opinion, what is going to break the camel's back. We've just increased interest rates again. If unemployment, instead of going up, which is what we are expecting it to do. I know the forecast says it's flat, but the world in reality is going, hang on, you just put your interest rates up again, should be going up. If that goes down, that US dollar is going to strengthen dramatically, and that is going to continue that bear market. So this, I think, Friday is when we're going to find out what's going to happen with the dollar. If those unemployment rates are negative, that dollar's coming down and the stock market's going to rally. If the stock market rallies and it breaks out of these highs, well, I think we're going to get, bear in mind by Friday, we could well be somewhere like that. We get that breakout I think we've got a good chance then of the dollar starting to weaken moving forward. Don't forget the dollar is at terminal rate. It's not at terminal rate, it's getting there. 5.25 is what the Fed have said is going to be terminal rate. Some people are calling 5 for the terminal rate. We're very, very close. When we get to that terminal rate, it can do nothing but weaken the dollar, because the dollar will have nowhere to go but back down. As soon as they start dropping those interest rates, the dollar's going to weaken. So we need to think about that with the inverse relationship between the stock market and the US dollar. So, but all of them at the moment kind of sideways, aren't they? So, morning, Fwang. I can't say your name, Fwang. Morning, Michael. Right, thanks. So definitely short, but not going anywhere. Whippy, whippy, whippy. So your 15-minute opening range is in. That's the blue line. And you've just broken out the 15-minute short. So I do want it short. It does look short to me. This is where we're headed. At some point. Right, let's look at the RSIs. Oh, by the way, update on the sentiment EA. So the sentiment EA, I did all the testing last week. Ignore the numbers. It was testing whether or not it placed orders or not. It wasn't testing any strategy. It was just basically told to get in and get out. So obviously it did exactly that, completely randomly, and that's the result. So it's all working fine. So what I've done is this morning I closed out everything that was open, apart from anything that it opened this morning. So I set it up over the weekend to trade on 75% sentiment. So it will enter the market when retail sentiment is at 75%. It's taken 3 trades this morning, as you can see there. So this is kind of the live test, if you like, of the daily entry and exit strategy based on negative retail sentiment. So I'm going to test this and see what it does. What I've done is I've set up the EA basically to get in at 1 a.m. and to use a first profitable close exit on the daily. Yeah. So we're not using trading stops. Well, I'm not using trading stops. I have no stop loss. So it places a stop loss to obviously to calculate the risk, $500, and then it cancels a stop. So basically it's using first profitable close exit only. So we'll see how that gets on. So from today, this is live testing. Exciting. So we'll see what happens. Morning, Axis. Morning, Alan. So that's all up and running, which is good. The hedging EA, look at the hedging EA. It's made 21 grand in a month. Sitting in 10% at the minute, still running. I'm going to let this run. This is the first time I've run this with drawdown control active. So I'm really interested to see what this does live. If this can last 3 months or something and double the account and go into no more than sort of 15-20% drawdown, I might stick some money in that and see what happens. I posted all the results from the normal market reversal at CA last week on Saturday or Sunday sometime. Morning, Seymour. Absolutely killing it at the moment. H1 mean reversion, and 6 grand nearly this month already. And 1700 on H4, M5, and the ADR reversals are absolutely killing it at the moment. In the last month, it's banked 17 grand. And obviously the reason being is the market flow and market structure at the moment is just textbook. So every ADR push we're just getting a beautiful profit take off of every ADR move. So yeah, it's just spot on. So yeah, really good results on those. But anyway, I'll let you know what happens with the sentiment as we go along. Obviously, we'll update that. DAX just broken out long. So you got to stop out on the 15 short and gone long. This is a look at. I've got to get it. I've got to put him up. Mr. Wick. It's nasty session. Nasty session. So we're just wicks at the minute. Horrible, horrible, horrible wicks. So just broken back out long again. So you've probably, depending if you got long there on the 5, you've gone in short there with a stop out, and now you've just been stopped out of that one as well. So if this long plays out, that's fine. It will get all the money back. But this is a nasty wiki session. Market looks like it wants to go long though at the minute. So RSIs, 4-hour RSIs are flat. H1 RSIs. So this is the H1 M5 strategy, which is what that one is running. So this is running H1 M5. So this at the moment we've got a few to look at. Aussie dollar Swiss, that's first one. That is obviously hit to the downside. So be careful with anything Swiss franc related today. Obviously we've got a couple of Swissies. In fact, half of this is Swiss franc, as you would probably expect. So obviously the Swiss franc news has just come out. Aussie dollar Swiss, we're coming down into a beautiful support area at the minute. You know, don't get me wrong. These are RSI extensions, and they will mean revert. You've got a mother of all propulsion gaps going in here. Look, at the moment, that's your propulsion gap, which is going to paint in the next half an hour. Huge. So we're going to get a retest of that, obviously. And we've got one left up there orphaned as well. So we're coming back up. So there's going to be a profit take on this move. However, we're off the back of a news event this morning. So you need to be a bit careful when you get into these. I would probably, I mean, it's up to you. Get in, obviously, by all means. But be prepared for an ADR hit today on the Swissies. So we've just had the Swiss franc news coming out. And it's positive. So we're going to get positive Swiss movement. It could be ADR, could be 150 ADR, could be 200 ADR, could be anything, couldn't it? But just make sure if you're getting in now, you're going to, scale in properly, half an ADR apart, no more than that, and wait for that profit take. This is where your propulsion gap is going to be sitting here. Yeah, so if we're going to push, that's where we're coming back to with the profit take move. We won't invalidate that high. So, you're just waiting for that pop. Yeah, back into propulsion. So it looks good. Aussie dollar Swiss, M5, wait for the reversal alert. You're not going to get a reversal alert on this. Oh, it's pretty tight actually. So yeah, nice tight reversal alert at the moment. Obviously, if this pushes down and makes a new low, then the reversal alert's going to come and sit down there. So it's going to be nice and tight on the way down by the looks of things. After we've had the propulsion move in, we're hovering around nicely down here. So that looks good. Hourly RSI extension, just wait for the pop. CAD Swiss, that's already playing. Why is it always the one I get into, eh? Why is it always the one I'm in? I shouldn't have picked the CAD Swiss. I don't know why I picked the CAD Swiss, to be honest. It was just the first one that I saw, and in fact, it was open. That's why I took it, because it was open. I was like, I'm going to trade a Swissy, and I looked at the CAD Swiss. What I should have done, if I had half a brain and followed my own advice, was I should have come over here and go, I want to get on the Swissy. What should I be using? Oh, CAD Swiss. There you go. So I would have picked the CAD Swiss anyway. Sentiment is against as well. That's why I picked it. So Aussie Swiss and CAD Swiss, we got sentiment against. We should be shorting it because the market's long it. So it's -2. So I'm on the right instrument. It's just not playing ball, is it? Anyway, CAD Swiss. So yeah, that's come straight down into propulsion. Look. And they've just brought up that propulsion gap. So I still reckon we got a chance of getting an ADR on this today. So RSI extension, M5 reversal alert. You're not, oh yes, you will. No, you're not going to get a reversal alert on this until all the way up there, look. So I would be a bit wary about longing that one. But yeah, nicely extended, as you can see on the hourly. I think we got a little bit more downside on this though. So we just put a propulsion gap in now. Yep, so that's going to be your propulsion gap on the way down. We've got this whacking great one up here to test as well. So looks good for longs. However, I'd wait a little bit further on that one. Euro Swiss, that's bouncing as well. This is all just pullbacks in all likelihood for next leg. So I'd be wary of longing them just yet. Euro Swiss is a nice long as well. Yeah, strong buy. COT bias is very, very strong. Fundamentals are good, and we've got no retail on side either way at the moment. But yeah, so that looks good as for a long. Euro New Zealand is the only one we've got on there that isn't Swiss franc related by the looks of things, apart from New Zealand yen. So Euro New Zealand coming straight back up into propulsion. Has already been tested twice this level, and obviously we retested it this morning there as well. But yeah, pushing really hard. This is obviously pushing. All the euros are going to be pushing this morning because we've got Swiss franc pushing. Euro and Swiss, it's all the same stuff. So Euro New Zealand is a long. We should be long in that one anyway. So actually, no, that's a neutral bias, isn't it? Euro New Zealand. Sorry, range. Yeah, sorry. Oh, I'm on the wrong page. All right, one sec. Let me just check the COT. Come along. That sounds like we just got an ADR. No, Euro New Zealand hasn't changed. I thought that had changed. I'm wrong. So yeah, Euro New Zealand is actually a sell at the moment based off the strength on the New Zealand dollar. It's all the fundamentals. You can see we've got no COT bias either way. There's no retail sentiment. For some reason, I thought that was neutral, a little bit more neutral. It probably was because we had retail sentiment offside last week. So it's actually a pretty good sell, Euro New Zealand. However, I'd be a bit wary about selling the euro with Lagarde coming up on Wednesday. Euro, we've got no news this week. New Zealand, we have got news. Well, we haven't got news on New Zealand directly, but we've got news on the odd. And that is going to affect New Zealand as well. So the rate, obviously, New Zealand and Australia, massive trade partners. If one of them puts their interest rates up or down, it affects what happens with the flow of the New Zealand dollar into and out of the Aussie. So that's why these two move together. Same with the euro and the Swiss, which is what we're witnessing this morning. The Swissy going up, we're witnessing the euro, and the same with US dollar and the CAD. They're all related. So we've got big news coming up on the New Zealand dollar. So I'd be a little bit wary about trying to short this one. As you can see, it is bullish at the moment. Yeah. However, market structure is just gorgeous on it. So it's push, pull, push, profit take, pull, profit take, profit take, profit take, profit take, profit take. What's next? Yeah. But if we get a massively weak or massively strong Australian dollar tomorrow morning when the rates are announced, the New Zealand dollar is likely to be ADRs. So what we normally see is after an Aussie news announcement, we are coming in the morning, don't we? And the ADR dashboard is lit up like a Christmas tree on the Aussie and the New Zealand. So that's what I would expect to see tomorrow morning. So big moves there, Euro New Zealand, but nice H1 short. We're just about to get an ADR on that. What's beeping at me? Is that the EA taking profit on something? Yeah, that's right. It's just that. It's just that banking $2.5 grand. It is only a demo, that one. So yeah, Euro New Zealand shorts. H1 RSI extension, very nicely extended. Would be good to get it better extended. I mean, where you are at the moment, you're sitting over 75. So there's a good chance we might get, there's an ADR just about to go off. Look. There's your ADR hit. Euro New Zealand ADR. So good short opportunity on that. Definitely now filling that propulsion gap. So M5 reversal, you're going to struggle to get in on this. Look, your market structure change isn't going to happen till all the way back down at the Asian highs. So not easy to get into at all. DAX is just broken out the highs again, just made a new higher high. So market structure now, we've got, since the breakout, we've got an inside bar followed by a higher low and a higher high. So we are still bullish, but very, very, very weak bullish moves. So yeah, Euro New Zealand looks good. RSI extension, ADR extension. So nice short opportunity on that one. New Zealand dollar Swiss, nicely extended to the downside. Basically, this is the Swiss franc movement. They seem to be selling off the Aussie during London. This is obviously, I guess, ahead of tomorrow's announcement, just getting themselves positioned correctly for it. So New Zealand dollar Swiss is a big drop today. Again, Swiss franc, we just had the positive CPI figures. We've got a weak New Zealand dollar this morning. So that's dropping quite nicely. Filled the propulsion gap. This one's already been tested, but we are coming down into support. So if we get an ADR hit on this one, it'll be pulling back into the propulsion gap, which will be here when that hourly candle closes. So that would be the play today. So RSI extension on the hourly, we're below 20. This thing's going to light up all the way across here in the next hour. So you'd be looking M5 drop down, reversal alerts on this one. Again, it's going to be a tricky one to get into because of the strength of this movement this morning. So what you ideally want to see is a little bit of an accumulation like this. Yeah. And then the next tight reversal alert you get, when it's exhausted, it tends to go into an accumulation, obviously. Those accumulations is where we're going to find the reversal alerts, then trade it straight back up into there. New Zealand dollar yen. Again, massive extension on this one, straight back down into this support. This is a tricky one. This was this 3 weeks. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 2.5 weeks ish. Sideways. Couldn't go anywhere at all. And we finally got this breakout, and now we've pulled back down again. So this is what we call an area of balance, where the market is happy to transact in that area for a period of time. This is a price discovery failure. Yeah, so this is what you would class as a false breakout if you're looking at it on a higher time frame. So the market has tried to trade back up into this area and tried to get this propulsion gap fill done, and it's rejected again. So I don't hold up much hope for the New Zealand dollar getting through this area, to be honest. I think it's going to be a struggle. So I would be looking for a profit take and then back down on that one. So although we are extended at the moment to the downside, which is absolutely fine, you can take a long on this. Again, you're not going to get a reversal alert on it, basically, are you? At all. It's all the way up there. So it's these things are really impossible to trade this morning. It's not worth it. But I'd be looking for a push and then a pull back down again on this one. US dollar Swiss is the only other extension we've got on the hourly. That is extended to the downside. So good long opportunity. Again, we're just filling the propulsions at the minute. So that one's already retested. That one's not tested. That one kind of. So I'll be looking once we get that fill done at ADR. So again, if we can get an ADR hit on this today, so we've got a 1 hour extension. If we can get an ADR hit, that's where I'll be looking to buy it. Yeah. So there's your balance. This is your price discovery. Probably going to fail and pop. Again, this week is massive news week for the US dollar. So we've got lots of US dollar affecting news coming out. We've got Powell talking tomorrow. We've got the CAD rate. We've got the non-farm employment rate, obviously, on Wednesday. We've got JOLTS followed by, obviously, non-farm and unemployment. So anything CAD and US is going to affect the US dollar. And, you know, we've had nothing but good news, have we? So I don't see any reason why we shouldn't continue to get that, but we'll see. So there's all your ADRs. Sorry, your RSIs. A lot of those are getting close to ADR as well. So there you go. Euro New Zealand, we just got the first one, haven't we? So there's your reaction off of the ADR starting now. So if we can get some kind of accumulation up here, put in a new high, the reverse alert's going to be tight for a short. And obviously when you're looking at ADR reversals, usually quarter to a half an ADR is really all you want to get, sort of 30 to 60 pips on this one to the downside. That's a beautiful gap fill. Look. That's good. So there's all of those. reset the buyer scorecard and look at just the buys and the sells. So there's not a lot changed since last week. We have had COT changes, as you can see. So these were -4s. They are now -3s. So a little bit less on the pound. That's really what's changed. So if we look at the pound pairs, GBP, 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 where are you? You're at the top, aren't you? I'm straight past it. There we go. So with these pound pairs, you can see there's been not a lot of change there, but some of them we're just creeping over the line and under the line on COT. So this is why these have changed a little bit. So pound New Zealand, for example, and pound odd, or pound New Zealand's had quite a good change. That's dropped quite a bit. So we've got that slight change in COT because we've had a slight change in the US as well. So we are still strong sells though, everything pound. Yeah. Selling the pound US, selling the pound New Zealand, Aussie New Zealand, big sell, Aussie US, big sell, Euro US, big sell. No COT bias or retail sentiment on those two on Euro US at the moment, but sell from a fundamental perspective. US dollar, CAD, strong buy, New Zealand CAD, strong buy, Euro Swiss, US dollar Swiss, strong buys. So weak on the Swiss franc. Again, COT bias really strong. But all these COT biases that we've got at the moment, as I say, we are 4 weeks data at the moment behind. Well, we're not. We're 3 weeks data behind, but we're looking at 4 weeks worth of information. So be a bit careful with COT. It does throw it out a little bit because a lot of the bias, obviously, as you can see, we allocate twice as much bias to COT than we do to the standard fundamentals because the market participation is much more important. It's very important, obviously, because we need to know where the big boys are going. So, but yeah, there's all your buys and your sells. Direction wise, looking at retail sentiment, it's mainly Swissy. So I'm only looking 75s above or below. So this is what the EA is trading. It's trading 75 bias, high or low. So ignore that. It's just testing on the functionality on it, but it's in its proper trades now. Ooh, wrong one. So US dollar CAD, Swiss yen, gold to a certain extent. The market is short on gold, so that looks like a nice little long opportunity there. CAD Swiss and Aussie Swiss. Yeah, so those are the two shorts at the moment because the market is long on those. So CAD Swiss and Odd Swiss obviously collapsing down, and CAD Swiss collapsing down, not as fast as I'd like it to be, but it is. So right, so that's everything covered there, really. Let me just catch up on the chat. Your 100k ADR uses 0.25 ADR levels. Yes, Adrian. So with ADR, I'll just close that CAD yen. So yeah, the set file here basically uses 0.25%. So what I've done, this is a slight variation on the one posted on the set file blog page. So the risk is reduced to 0.2. So it's a 0.5% smaller risk, still off of half an ADR. So the risk is still working off of half an ADR. But my positioning is closer together. So I'm scaling in at 1/4 of an ADR. Sorry, wrong bit. Up here. No, that is right, but no. Yeah, sorry, distance between orders. Yeah, 1/4 of an ADR. So yeah. Obviously with ADR, obviously I'm not getting in at 1/4 of an ADR. What I'm saying is when we hit ADR, if you get a reversal alert and it is 1/4 of an ADR away, would be better if I could actually show what the hell I can't. Yeah, so my entry, so let's say, for example, Swiss yen. Yeah, if we get an ADR hit on this today, obviously the EA gets in when there's a reversal alert. So what I'm saying is get in at 100 ADR, and if you don't get a reversal alert until up there, fine. We get that's where we get in our first entry. But the second entry, as long as there is a quarter of an ADR between that entry and the next one, fine, take it. Because obviously this is a quick in out. I'm looking for a quarter. Actually, I'm not looking for a quarter. I'm looking for a third, I think. My target. Yeah, 0.3. So I'm either looking for a 0.25% return, or I'm looking for a 0.3 ADR. So, you know, all I'm looking for literally is a very, very, very small pullback. Yeah, it needs to pull back sort of that much on that much movement, and I'm out profit. So I want to get in fast, so that I can get out fast. That's the whole point of this. It's a scalping strategy, ADR reversals, which is why it's closed out so much. So, you know, that's why it does so well, because you're in and out. It's a scalping strategy. In, out, done, fast as we can. There you go. So there's these quarter of an ADR between the two. 16 pips. So these entries were, where are we, buys? Yeah. So there's the ADR hit on Friday. First entry, pushed down, didn't go anywhere. We've pushed down this morning. That's your reverse alert on M5. There. So that would have been, your reversal would have been there. Like that. So there's the entry. So it's quarter of an ADR between the two. Yeah. And I'll get a third entry once we push down in here and get the next reversal out. I'll get a third entry. I'm literally going to need it to get to somewhere like that, or probably there. Not even there, something like that. Once I get that reversal alert. Literally, it's the beauty of this is you're in and out literally within a couple of candles. Once you start getting into sort of 3 positions plus, to get that target hit is literally bang, bang, bang. That's all you're looking for, is a quick profit take move that they make on a push. You're out, you're done. That's why it banks so much and so fast. Really good set file. I love it. But it's my bread and butter. You know, it's these ADR reversals, H4, M5, H1, M5 is it, isn't it? It's it. Morning, Tom. EA's making money for you, such a wonderful feeling. I know, it's good, isn't it? When you have a good one. You're not the first person that said that, Seymour. When you start position trading, it's just, and this is one of the things I get a lot in Telegram. I never post any reviews. I don't ask for reviews, but I get a lot of people DM me in Telegram when they've done the position trading bootcamp, and it's life-changing. And it's like when you buy the EA and you let the EA run, you know, all of a sudden you go from constantly losing money and constantly losing trades to turning your P&L green like that. It feels like, it does, like you say, it feels wrong, doesn't it? It's like, what the hell's going on? Why is this all green, and why is, well, what? It's confusing. It's a lovely feeling, but it's also, no one has faith in it until they've done it for a good couple of months, because they can't quite believe it. You can't believe it happens until you do it, because you're so used, everybody is so programmed to lose money, because that's what you do all the time when you put stops in the market. You get stopped out, and it's like when you suddenly stop getting stopped out and you start making money, it feels wrong, doesn't it? It does feel wrong. But you know, I'm going to do some videos on this as well. Well, what I'm going to do is I'm going to do some live sessions. So what I'm planning to do is and that's one of the reasons I put the PDF for the course out there last week, was because I'm going through that, drawing up a lesson schedule, if you like. And, you know, those are some of the things we're going to talk about and spend an hour on. And what I'm going to do is I'm going to do the analysis in the morning. and then, or in the afternoon, depending which session it is. And then at some point, we're just going to stop analysis, stop trading, and go straight into education mode. And I'm going to record it from that point onwards. And then I'm just going to put all those sessions that we're recording up on YouTube so that they're all out there and they're all live. And it will be the bootcamp, but it will also be live so people can ask questions, because the best content, I think, that goes out there is when we're sitting here just talking crap. And it never gets recorded. So I'm going to start recording all of those. DAX is off on a mission. We are breaking new highs. Flying out the highs. So there's your pre-market 15 long as well. So the trade this morning was that one. So just hold on to that long. Where the hell we're going, I've no idea with the DAX. That's a tricky one, isn't it? This is new highs, new territory. Okay, so we got that high there. I still can't see it. I'm blind as about. I'm on drugs at the moment for my trapped nerve in my arm, and one of the side effects is blurred vision. 15661 is the high. So we need to watch that level. Oops. There. So there's your high. That's not so much an all-time high, but that is, we haven't got up there for a while. And that is the high from the range. So be careful here. This really looks like a mean reversion opportunity to me rather than a breakout, to be honest, today. This zone here between these highs. Yeah, that's where I would be looking for a mean reversion play back down into these propulsion gaps on the lower time frames. Which is here. 125 ADR is there. We've got a big propulsion gap here. If we're going to go long, that's absolutely fine. What it is going to be pullback, isn't it? So you're doing the mean reversion trade by shorting this today. However, if this breaks out of this level, we're going to get, I think, a pretty strong upward movement today, which would be lovely. So if we get the breakout, brilliant. If we don't, mean reversion is in play on those. CAD Swiss, you're going to annoy me. So I'm only going to take this one today, CAD Swiss. I got 1% risk on it. Short. We're going to come back into this propulsion. So we've got this gap. So I'm looking for a retest in here. And then a short. Germany 30 ready for a pullback. That's exactly what I just said. Yes. Well done. Franco. Is that you saying hello, Franco? Thumbs up. Seymour, it's just a game of money. Yes. All the same set files available to us. Yeah. I mean, the set files I use are pretty much the same as you'll find on the blog post. Yeah. H4 is flat at the moment. As you can see, that's H4 is flat. H4 M15 is not working because there aren't any. So that's why that one is flat. And again, I said on Friday, how often do you see that? My P&L flat. It just doesn't happen. Such a rare thing to have a flat P&L running mean reversion because there's just no risk on. They've all played out. It's just been one of those weeks where everything's just played out, which is really nice. But yeah, these are all available. They're all just the normal set files. The only tweaks I ever make on set files is I might slightly tweak the risk up or down by a quarter of 0.5% or something. That's all. But everything else is the same. Yeah. Distance, half an ADR or an ADR, up to you. How you get out, half an ADR or 0.5%. It's all the same stuff. Drawdown control is being done on this one at 1 ADR, scaling out at 30. But, the difference, if you change that to 0.75 and 30, or change it to 0.5 and 50%, yeah, you'll get a slightly different result to me. If you go for 0.3 as your target or 1 as your target, you'll get a slightly different result. Don't forget, this is H4 M15 or M5. Again, entering on M5 or M15, you'll get a slightly different result. This is H1 M5 rather, but it's the same thing. How aggressive do you want to be on your profit takes? There is no one set file that is right or wrong. They will give you slightly different results, but at the end of the day, as long as the market structure is there, this will, if your set file is slightly different to my set file, we will get slightly different results. They'll all be positive. You might have better drawdown than me or worse drawdown than me. Don't know. Again, depends what the market does, doesn't it? There's no right or wrong. DAX is pulling back off the highs. Well, no, it hasn't got there yet, but it's just pulling back off of the pre-market 15 highs. Yesterday's high basically has just been taken out. So you need to watch this level because this is obviously yesterday's high. This is potentially a liquidity run on yesterday's high. Although no one in their right mind would have got in short in the last hour on Friday. So, these are things you've got to think about. Is there liquidity there? No, not really. Unless you're an idiot getting in to hold over the weekend on an index in the last hour. Yes, you're going to have liquidity there. Obviously, you're not anymore because you're dead. But that's unlikely to be a liquidity run, isn't it? It's more likely to be an attempt to test that high than it is to be a liquidity run on that high. So that's more likely the target, that 15,661, which is not far away. Is the ADR reversals that you are using available to be downloaded? I put it in the Telegram group, didn't I? Files. I don't know if I did or not. I'll put it in there now. Obviously, you need to change the magic numbers. Don't forget to do that. I'll call it Lee Live ADR M5. ADR set file for MRA EA I'm using in the live room. So what I'm going to do as well, I'm going to take a quick screenshot of the P&L and the open drawdown on that, just so you can see what it's doing. Microsoft have updated the snipping tool. Really annoying. The snipping tool, whenever you used to take a snip, it used to automatically bring this window here to the foreground. It doesn't do that anymore. It's very, very, very annoying. For me, anyway. Yeah. I'm getting old. Everything annoys me when you get old. I watched a film for the weekend, Life of A Man Called Otto with Tom Hanks. Really good film. It's about an old bloke that gets cantankerous and old. And I was like watching it thinking, oh, God, give it another 15 years. That's going to be me. Majority stockholder Harvey Investment Group announced it unloaded its stake in Credit Suisse Bank. Did it now? In Credit Suisse, not the SNB, obviously, the Credit Suisse. Credit Suisse. Morning, Neo. Morning, Shroud. So we're stuck on DAX at the minute. Oh, come on. Annoying. So I'm just going to move my stops on this. I've reduced these stops down. So the original stops were actually 0.5%. So that was where the original stop was on that trade, and the original stop on this trade was there. So I'm just going to readjust them back to roughly where they were. Reason being, obviously, I'm expecting this propulsion gap to get a 50% test at least. So if I'm going to get stopped out, I don't want to get stopped out somewhere in here, knowing full well that this is highly likely to happen. So I'm just moving them back to where they were. I was expecting it to just do a run to ADR, but it's not bothering. So the US dollar, just got some RSI alerts again. We'll have a look at those in a sec. Just putting back at the moment. So the US dollar, we've got a little bit of strength in the US dollar at the moment, which is why the CAD's pumping. So that's why that CAD Swiss isn't working as well as the New Zealand dollar Swiss. I just basically picked the wrong instrument this morning, or the Aussie Swiss, either or. DAX pulling back into propulsion, has filled it. So this is obviously the move off of the hourly candle close. We're just getting a little bit of volatility because everybody's entering their new positions because the hourly candle's just closed. So RSI extensions. So it's everything we looked at this morning, exactly the same look. Aussie dollar Swiss, except now we've just basically got more extended. So we've alerted down there now. I've just realized all my my lines have gone, haven't they, that I drew on. I drew nice big thick lines at the 80s, didn't I? And so they've gone. And 20. Because we like to see those levels because they're the super, super, super strong levels. So yeah, we're now very, very, very extended down there. Not quite got an ADR on it. CAD Swiss obviously got extended. That one, as we can see, has already bounced back. Your M5 reversal alert, however, has not triggered because the speed of that move. It's a news move. It's filled the gap. That was the main thing it's coming back to do, was the gap. So this propulsion gap that we're in at the moment, I would expect, if this is going to be Swiss franc, so the one of two things is playing out here. If that initial move on the Swiss, on the CPI, was actually what they are intending to do, all we're looking back at the moment on here is that is the news move. This is the pullback. This is going to be the add. So this is where we will add into that position, yesterday's low. And then pump back down from there. So hopefully we'll get a bearish engulfing or some kind of bearish candle here and then a continuation short on that one. So I'll be a bit careful about trying along that. Euro odd has just hit. So Euro odd is a new RSI extension to the upside. So we're nicely extended now on that one. So start looking for reversal alerts on that. Euro is pushing very nicely along with the Swiss franc. So again, we might get an RSI on that. An ADR hit on that. Got nice highs up here. So that area, anywhere around ADR today, likely to find resistance for shorts. So that one's starting to set up nicely for a short. The euro, from a bias perspective, the vast majority of euro pairs are longs. However, euro New Zealand and euro US are the shorts out there. So these are all longs, obviously. Bear in mind, you are mean reverting against what we're expecting it to do. So euro odd, euro Swiss, yeah, just covered that one. Euro New Zealand, again, that's just got a little bit more extended. Already covered that one this morning. Pound New Zealand, so that's new. Pound New Zealand straight up from underextended to overextended again. So again, looking for push down on this one. Pound New Zealand, all the pound pairs are sells pretty much, or range bound. So everything we got here. So these are the ones now. Look, see, cop bias, ever so slightly long cot, but not very at all really. As soon as you get some retail sentiment negative on that, i.e. as soon as the retail crowd start long in the pound will start to drop. So these will all go back to negative range bound. But pound US, pound New Zealand, nice short opportunities. This is the pound New Zealand, obviously, so we want to be shorting every pop on this. Remember what I said on Friday? I'm not sure if we're going to get back up to that. I think it's going to be quite a struggle. We got that massive rally on Friday in the afternoon, or throughout London, basically. So this looks like it's continuing this morning, and this is this New Zealand dollar weakness. So we're getting a lot of weakness approaching the Aussie dollar announcement tomorrow morning in this. So this would all potentially reverse tomorrow morning. So short opportunities on this. So just get ready to get in short. Yeah, just take a short. I was watching a video at the weekend, and it's really refreshing. A guy, he was doing a YouTube video. No, it wasn't a YouTube video. Sorry, it was a Telegram group chat that I was thumbing through. And basically what they were doing was they were saying, it's so refreshing to be able to just get into a trade and not worry about your entry. And basically they were trading supply and demand. Yeah, so it's the same stuff. Supply and demand, support, resistance. It's all the same stuff. It's the top and the bottom. And I was reading it, and they were making really good money, these guys, from what I could see in their P&Ls that they were showing. You know, it's one of the usual bragging sort of things. But they, you know, the P&Ls were all looking very healthy, and all they were doing was getting in at support and resistance, basically, when there was structure breaks. And the crux of the conversation was just getting in and not trying to time the entry is what makes you the money, and not actually worrying about that, the entry, worrying about the exit. And that was the key to it, was worrying about the exit. And that's what I keep saying. And this is what the Market Reversal Alert EA is doing. It's just getting into trades when it knows there's an edge available, right? But the exit is the only thing that's programmed. So the EA is told to get into the market, and just get into the market when it looks pretty good. It might be crap, it might be brilliant. You might nail the entry, you might get the entry completely wrong. But it's the exit that is the important bit. Just taking a small amount of profit out of the market on a regular basis. And that's what those guys in the chat were doing. And I was reading it and thinking, hey, is this being rubbed off from the live rooms? Have they done the boot camp? Because they were talking like me. And I don't see that very often. What I usually get is people slagging off people that don't use stop losses. And I think there's a movement starting. I don't know whether it's something that's been started off the back of the boot camp or what, but there's a movement starting of people actually now going, yeah, no, we shouldn't be using the loss. No, we shouldn't be using 1% risk on a trade. But yeah, it's interesting. Anyway, I was going off on a tangent. But pound New Zealand, yeah, nice short opportunity there. So very nice extended on the RSI. We're going to get a profit take on that move. There's no propulsion gaps to look at for the Friday move. We've got this one from today, but it's very, very small. We will come back and test it. You know, it's just, the small ones still get tested. But the question is, are we going to get a reach for that? So when you're getting into this, dropping down to M5, getting a reverse alert, trying to get in when we see some signs of weakness approaching, just think to yourself, if you are going to get in on this, and if you're using the EA is going to do it all for you anyway, but you may well have to scale into this 3 times because there is, or twice, depending on whether you're half an ADR sort of trader, but there is room to the upside. If we were to scream up there today, I think we'll come down like a house of cards tomorrow. You know, same thing. I traded this last... I haven't got it on here, but I traded this last week, didn't I? I scaled in on, where did I scale in? It was here, wasn't it? That's the ADR, wasn't it? Yeah, this was the ADR move. So I got in on that one. Yeah. That's what we're going to get. So if we get an ADR hit on it today, even better. Jump in. So pound New Zealand setting up nicely. New Zealand dollar Swiss we looked at. That's the one I said we're just about to get lit up across the board, which is nice. Why is my CAD Swiss not doing that? I just picked the totally wrong instrument. Anyway, there we go. So the CAD Swiss is coming out of that propulsion. So there's the test and the ad. New Zealand dollar Swiss was the one this morning I should have taken, not the CAD Swiss, but never mind. So be careful with anything Swiss, these mean reversions. This is going to mean revert back up into there. Yeah, but you could be looking at a 3-day wait, or it could just come back and do that today. It's coming back down to retest this propulsion and obviously this area down here. New Zealand dollar yen has just got more extended and as the US dollar Swiss. Okay, there you go. Gems, how do we trade the ADR levels? So ADR is basically average daily range. You can trade it in any way you want to. I trade it using the market reversal alerts EA, which is this one here. No, it's this one here. So this just trades ADR reversals, and all it does basically is when we get an ADR hit, Euro New Zealand today is the only one so far. We monitor M5 and wait for a reversal alert. Yeah, so the reversal alert structure signals a market structure shift, and the EA basically takes these alerts when we've hit the ADR condition. So the average daily range of a pair is respected around about 58% of the time. So when you get a strong push in one direction that takes you outside of that average daily range, what normally happens is the market will then do a profit take move on that push to bank their money, which means they have to trade it in the opposite direction. So what you tend to get is an M pattern reversal, and it will happen at an ADR level. Yeah. And these are the statistics on extending beyond these levels on Forex pairs. So 150 ADR gets extended beyond only 12% of the time, 175 only 6% of the time, 200 only 3% of the time. So when you get up to this sort of level, there's a 97% chance that market won't go any further. Doesn't mean it's going to come screaming back down. A lot of the time it does, but what it means is it's unlikely to go further than that level. Yeah. So we wait for a sign of weakness, and I use obviously the market reversal alerts indicator, but you could use market structure. You could use just price action if you like. Yeah. So you got push. Yeah. So you could wait for a break of that range. This control candle here, this propulsion candle, to wait for it to break below that level and jump in. The reversal is usually a lot closer than it is here. This is just a very, very, very strong move today. But that's basically how you trade ADR. So it's a mean reversion strategy. It's explained on the website. If I'm not sure if there's links being put in the chat all the time to different pages on the website. Yeah. So just go to the website, and on the website there's all the indicators. So the ADR reversal indicator is there, and on that page there is a video on how to trade it. So every indicator has a video explaining the strategies, what it's doing, what it's showing you. The EA page has lots of videos. There's free education area on there with the Bootcamp. So the Bootcamp, if you're going to trade, what the EA is doing with ADR, is position trading. So this doesn't use a stop loss. This basically scales into a trade and gets out on the mean reversion when the profit take happens. So the market pushes, the banks get long. For the banks to make profit, they have to take the opposite side of the position, which becomes a shift down, a profit take move as it's called. And then that's where you exit. So you get in as the bank is scaling into its position, and you get out when the bank profits on the position. So basically when you get to green, it goes over there. But it's all explained on the website. When position trading, timing is irrelevant. Yeah, as Big Papa just said, it doesn't matter when you get in. So basically, when you get into a position, it doesn't matter how you get into a trade, right? So, which account am I in? This is H1M5. So, I'm not going to take a trade because I don't want to talk about the statistics and stuff. But so basically, it doesn't matter when you get into a trade. So if you want to, you can basically hit the sell button now. Yeah. What stops you making money in the market is when you put an order in there to say, get me out of the market with a loss. So if you just get into the market now, but don't use a stupid risk. So, oh my God, CAD Swiss, you're driving me mental. So just get in with a small risk. So reduce your risk right down to something like, oops, can't do that, 0.2%, and hit the sell button. All right. Just hit the sell button now with 0.2%. If that trade doesn't work and it goes against you by a quarter of an ADR or a half an ADR, the worst case scenario is you're going to be something in the region of 0.2% in drawdown. So you just add another position when it's extended even further, because the more extended this thing gets, the more likely this thing's going to pop back. It's called elastic band theory. Again, it's all covered in the bootcamp on the website. It's all free. Go and watch it. It pings back. So it doesn't matter if you press the button right now, if you're right or wrong. If you're right, it's going to go down. If you're wrong, it's going to go up. If you're wrong, you're only wrong temporarily, aren't you, while the market's pushing in that direction. Get into another position and wait for yourself to be right. When you're right, you take your profit. The only reason you lose money is because you put an order in the market to tell the market to take it away. If you stop using that order that tells you to lose money, you will stop losing money. Very simple. That's position trading. And again, that's all covered in the bootcamp. Morning, any chance to look at gold? Yeah. So gold is just another US dollar cross. What's the sentiment on gold at the moment? Let's have a look. Come on, website. Oh, everybody's landed on the website now, haven't they? Overloading me. Gold. Right, 74% of the market is short on gold at the moment, so I'd be looking for longs right now. So obviously from a longer term perspective, this is just a US dollar cross. So what you're going to find is when the US dollar powers up, gold goes down. When the US dollar drops, gold pushes up. At the moment, we've got a weak US dollar. And we've got lots and lots and lots of new news coming out this week on the US dollar. So right now, it's in a bit of a pullback. The market at the moment, is all short on gold. Yeah. So what I would expect this to be doing at the moment is looking for a push ahead of the news this week. So we've got a propulsion area up there to target. We've got this propulsion. This one I think is going to become orphaned. So this is the FOMC statement. This is the unemployment figures from last month. This Friday, we've got the unemployment figures coming out, obviously, again. So if those unemployment figures come out as negative again, that's what I would expect to see. So at the moment, I would expect us to have a little bit more of a pullback ahead of the news coming up this week. So the market is obviously positioned short at the moment, so they're going to want to take it long because the market's money is all going to be sitting up at the highs. Yeah. So if you're getting in short, this is what we're just talking about with position trading. If you enter the market short, obviously you can see the market's been pushing up. So you get in short, you put a stop, you get stopped out. You get in short, you put a stop, you get stopped out. You get in short, you put a stop, you get stopped out. You rinse and repeat. You get in short, you get stopped out. Everybody's short at the moment. Liquidity's all there. That's where the market I would expect to go and drive to. But it's got to come find people to get their money from, hasn't it? So it will push down short for a while. But obviously, as you can see, the market is short. The thing is pushing long. So I'd be looking really for longs at the minute. However, I don't know what time frame you're trading. So if you're trading, what my view on this is irrelevant because I don't know what time frame you're trading. But if you're trading on M1, you might be thinking I'm going to go long in a minute when we get down to this low. I've no idea, but I'd be looking more for longs than shorts. However, we've got all this area down here to come and retest at some point. That is what I would expect to come and target when we get the news on Friday. I would suspect. Could do it this week. You never know. Did I talk about pound US dollar? I haven't covered pound US today, no, because there's no alerts on it at the minute. DAX is being a pain in the backside. So DAX, we didn't even get up to that high. We're just back at the 15-minute opening range again. So yeah. Thanks for the follows, those people that followed this morning. Astro, Algo Cats. And sales one. Sales one, shouldn't you be working? You sound like you should be actually customer service for someone. Sales one. Shouldn't you be working rather than watching YouTube streaming? Pound US dollar. So pound US from a bias perspective is a massive short. For the pound US dollar, it's a -6 sell. So COT bias at the moment, again, this is a little old, but COT bias is short. All the fundamentals are mostly negative. The thing we've got going against us at the moment is retail, because retail are short on it at the moment. So the market will be trying to push higher to find liquidity. Yeah. So at the moment, all the liquidity is sitting above yesterday's high. So that is where I would be expecting it to try and get to at the moment, but I'd be looking for short opportunities. So for me, there was a short entry on Friday. So was there a short entry on Friday? Yeah, I mean, you would have got in on the open this morning, really, but so yeah, H1 or H4 RSI extensions to the upside, looking for short opportunities. Haven't really been any. Sort of had one there. Definitely had one, obviously, there. But you've not had any H4 opportunities. H4 is really flat at the minute because the market's very contracted and range bound. So we're not getting a lot of outside RSI extension sort of movement, really. But you can see, obviously, the short opportunities for position trading have been there. You've had a long there, you've had a short there, you've had a long there, you've had a long there, you've had a short there. So, but I'd be looking more for shorts because we're expecting US dollar power up and the pound is very weak at the minute. So shorts on this. In theory, you could trade it short now. So the market structure is pretty clean. Although we've just kind of gone into really a range, haven't we? So if you're getting short here, you just have to plan your trades. That's half an ADR from where we are at the moment. Well, no, it's not. That's sort of roughly an ADR, isn't it, from where we are at the moment? So you might want to take, if you're getting short now, you might want to take a couple of trades back up into that area and then take the move from there. But I'd rather wait for RSI to get extended. This is very flat at the minute. Long term, obviously, it's a mess. If you take Liz Truss out of the equation and Bailey's bailout, we're not really going anywhere on this. We've had a weak US dollar, but now we've got a strong US dollar. We should expect that to come down. So short it when you get any RSI extensions. Short it up at resistance. Any resistance level you find, that's a beautiful support resistance level there. Any of them. Obviously just drop down M5, wait for reversal alerts. You had one there. But again, you just had a reverse alert long because the market's sideways. Yeah, this just range bound at the moment. But like it's short. But again, no targets either on this one at the minute. Quite difficult to target to the downside. We've got this one propulsion there, which got retested. So that's really the only valid target to the downside at the minute. Not quite sure why that's not a... Oh, yeah, that candle's shorter than that one. That's why that's not a propulsion. Yeah, I don't know, Padres. It's just not right at the minute. Just not in the right spot. I'll go, Cats. You deserve a subscribe. Thank you. That's very nice. Give me a thumbs up as well, because that will help the stream even more. Tony, morning Lee. Could you use your market sentiment on the euro to get bias on the DAX? You could do, yes. So if you look at all the euro pairs from a sentiment perspective, yeah, that's a good point. I mean, I could pull in sentiment on the indices. The trouble with sentiment on the indices, I think, is the indices are not manipulated in the same way as Forex pairs are. Yeah. So with Forex, and the reason sentiment is mainly published on Forex is because Forex is manipulated. Because with Forex, the institutions have to fill commercial orders. Yeah. So they are getting into their desk in the morning, they're looking at their books and they're going, right, we've got to execute X million long pound US dollar because we've got to do all these trades for Microsoft, etc., etc. So they have a book and they have a commitment to move the market by executing commercial orders. To move the market, they need people on the opposite side of their trades, because if they want to buy pound US dollar and do an exchange for a customer, they need to find someone that's going to sell to them. And obviously the best thing to do is find where the liquidity is, because that's where the orders are that they can get executed. So that's why they run and they stop hunt. That's why the stop hunt exists. It's just a phenomenon that creates market structure based on what the market has to do, a commitment. The problem with indices are that indices are just an amalgamation of stocks. And this is more of a sentiment-based index on stock sectors and stock purchases. So the market doesn't, the market doesn't do liquidity runs as such, because it's not having to execute in the same way as it does on Forex. So I'm not sure about pulling sentiment in. I haven't tested it because it just doesn't move in the same way. Yeah, if Tesla has a bumper earnings report, right, the Nasdaq is going to fly. Whether the sentiment is long or short, it doesn't care. Yeah, it's just going to pop. Whereas FX is a little bit different. And then obviously you've got the speculative players in there as well. But yeah, if you're going to look at the retail, yeah, if all of retail is long or short, for example, so we've got, obviously, if you average all this out, we've got a majority short, haven't we? Yeah, they're short the euro yen, they're short the euro odd, they're short the euro CAD, everything else is kind of midline. So overall sentiment is short for the euro. So that would mean that the DAX would move up because the DAX has an inverse effect on the euro. Yeah, so this morning we've had a bit of a pop, and potentially that is the movement that we're looking for this morning on the DAX, back up and to retest that high. So yeah, you could do. But I would rather, and this is what the opening range breakout EA is designed to do, I would rather just go with where the market is going, because you don't know where it's going to go at the open. You don't know what the institutions have got to drive at the open for their customers. Yeah, if a pension fund comes along and goes, we want to buy a load of tech sector, the Nasdaq's going to do what the hell it likes. So I don't know. I'd rather just go with momentum. Yeah, this is a beautiful momentum strategy, the opening range breakout. When it's got momentum, obviously this morning it didn't have any. This morning we had John Wick. Literally all morning we just had wicks. And then we finally made a move, but yeah, just John Wick all morning. And there's nothing you can do with that. You just got to sit through it and live through it and take it on the chin. I'll go Cat. So I saw you. Yeah, thanks. What time frame are you trading? All sorts. Mainly M5 and M15, but my trades are actually H1, H4, but I execute on M5. What was I going to say? CAD Swiss I was just going to look at. Lovely. Okay, so there's our CAD Swiss rejection. So that's the propulsion test that I was looking for. What I want is a new low, really, though. If we can, that'd be lovely. So just want to get a new low put in on that there. As soon as we get that low broken, we'll come back down and test that area, and hopefully we'll get an ADR today. What I'm worried about is getting exhausted. Obviously, the Swiss franc's been pushing very hard, and the CAD's been pushing back. So I'm worried about exhaustion and not being able to get any more downside on this. But they're certainly adding into the shorts. So this is what the propulsion gaps are for identifying institutional buying and selling. So that was a large institutional order. They want the market short. As we come back and test that area, we expect it to drop back down out of it, which is what we're seeing here. So they add into their short orders. So they go short, they either profit take, or the market pushes back and then they add more short. Do you trade pending orders? No. Only on the opening range breakout strategy, yeah. The opening range breakout strategy uses pending orders, but I don't use pendings. I use an EA, so all my trades are taken with my EA, which executes the trades. Are all market orders. New Zealand dollar yen's just taken another one. There you go. So there's that entry there. That's the reversal alert on M5. So the whole point of the position trading is to make sure that you're keeping your average within achievable levels. So there's my average. So basically, if you look at it, all I need now is really 2 M15 candles to push, and I'm out. Just waiting for the waiting. That's what you spend your life doing, waiting. Algo cats 15. Oh, M15. Yeah, so M5 or M15 is what I trade. It's all to do with multi-time frame analysis. So again, go onto the website. If you go to the bootcamp, actually, I've got a video on MTF analysis in the other free trading videos section, using multi-time frame analysis. So this teaches you ways to use multi-time frame analysis for analysis and then execution. So you analyze on the higher time frame and you execute on the lower time frame to get the best entry. I will read everything on the website later today. You won't do it today. You can start today. You won't get through it all today. There's a lot. The bootcamp, that's what you want to concentrate on, the bootcamp. Yeah. That's 10 hours, which is why it's split into 5 days. A couple of hours a day. You won't get it through it today. No, you can read the, yeah, you won't get it through it today. You can start today. Or do what everybody else does and watch me on 150% playback so that I sound like a squeaking mouse. Then you will then you'll be able to get through it in a day, but you won't take it all in. So that's all the analysis done for today, really. I mean, just loads of RSI extensions on the hourly to get into today. We've only got the one ADR on the Euro New Zealand so far. That's come off of ADR very nicely. Oh, just about to get a reverse alert on that. There you go. So that's what I was saying about the reverse alert. Yeah, that was your previous reversal alert. Now we've made a new high. We've got tighter structure. You're just about to get a reverse alert short on that one in the next 2 minutes, potentially. But if we don't break that structure, obviously, it looks like it's holding at the minute, it will push up and we just wait. We get in when there is a reverse alert. We don't just get in because we're extended. We get in when we're showing signs of the market weakening. So I did one and a quarter speed on the bootcamp. Yeah. It's amazing the difference it makes, yeah. When you're doing something, when you put me on quality so low on that. When you put I'm not watching it, I don't know why I'm changing the quality. It's got bugger all to do with it, is it? Playback speed. Yeah. If you think about it, what you're doing, you're making 10 hours a lot shorter. A lot shorter. Yeah, if you put me on 1.5, I talk fast. Anyway, everybody says I talk fast. I do talk fast. I think that's because I've been through ICT's training and he talks so slow. I have to make up for it. But yeah, if you speed it up, just, you have to watch this more than once. Yeah, watching it once is the second time you watch anything. I find this with all courses. Second time you watch anything, you get so much more. It's like watching a film. You watch a film, you go, oh, that's an awesome film. You watch it again and you go, wow, I didn't see that. That was really relevant. And it's exactly the same with any training course you take. When the second time you watch it, it will suddenly, bang, it will click. Way, way, way better than it did the first time. Just about to get a reverse alert on Euro New Zealand for your short. 85 in chat. Is there? Blimey. Busy. Why have we only got 39 likes then? Come on, guys. There you go. Short Euro New Zealand. That is based on the H1M5. So this is an H1 RSI extension. We just had the M5 alert. Yeah. So hourly is the analysis time frame. 5 minute is the entry time frame. So we're extended on the hourly RSI. Big, strong push, multi-day push. So we've gone basically London push, New York flag, Asian push, sort of a flag, London push, ADR, exhaustion, gap fill, drop. Market structure shift. $43 likes, that's better. This has got half. So that means half the people in it don't like me. That's a bit depressing, isn't it? Ivan, why I see YouTube, some traders say Forex is not good market. You should trade futures or stocks. You trade what you want to trade. Entirely up to you. The people that, there's no right or wrong in anything, right? So I get asked all the time, why don't you trade futures? I do trade futures, but I don't trade futures the vast majority of the time. I trade Forex and I trade indices. I can trade Forex and I can trade futures. I can trade anything I want to. Basically, as long as there's a market structure in an instrument, you can make money out of it. Yeah. Everything goes up and down. Whether you choose to use stocks as your instrument, if you're going to use there's different learning curves, right? So the reason I think the vast majority of people trade Forex is because it is easier. Yeah. It's easier to understand. It's easier to get your head around. The market structure is a lot more stable. If you're going to trade stocks, you need to understand the technicals behind large cap, small cap. You need to understand earnings. You need to understand gaps. You need to understand the underlying company supplying that asset, right? So if you're trading Apple, yeah, you also need to understand the 100 or so electronics manufacturers that supply Apple. What happens to those manufacturers has an impact on what happens to Apple. Yeah, there's a lot of stuff that goes on in stocks that you need to understand from a technical perspective. It's more difficult. But if you like that, then you trade that. Futures, it's very, very simple. But from my opinion, why trade the futures market? Why not trade the CFD? It's the same thing. This goes up and down the same as the futures does. So I just trade the CFD version of it. It's the same thing. Futures, if you're going to trade futures, you are more restricted about your risk. Yeah. So you can only trade in single contracts on futures market. So if you're going to trade single contracts on the futures market, you're going to be risking $12.50 on the NASDAQ and the S&P. Yeah. Or you're going to trade micros and you're going to risk $2.50 on a tick. Yeah. So every single tick there, you just saw that go up by $25. If that was the S&P, there you go. There's another $25. $12.50. $12.50, $25, $12.50. Yeah. It's big risk. Some people love that. You get in, you get out. When I'm trading futures, I'm trading on the ladder. Yeah. I'm scalping ticks. I'm scalping 8-tick moves. 8-tick moves are worth $200 to me. It's a totally different form of trading. So you've got to try all different styles of trading and all different instruments to see what you click with. Everybody's going to have something different. Somebody says, oh, it's not good to trade Forex. It's because they're not good at trading Forex. Yeah. Doesn't mean it's bad. Just means they're not good at it. Just because, I'm not good at tennis. I don't play tennis. Not good at squash. Don't play squash. I'm really good at cycling. So I do a lot of spin classes. Yeah. You do what you're good at. There is no right or wrong. You try everything. Oh, don't lose a stop loss because you'll lose loads of money. Oh, I beg to differ. Yeah, some people aren't good at not using a stop loss. I am good at not using a stop loss. You know, there's no right or wrong. You try stuff. You do all the courses. You learn everything. You try the different instruments. What you come out as with the one that works for you is the one that works for you. Do the boot camp. Yeah, spend 10 hours watching 5 videos. You'll either come out with it with a light bulb moment, you start making money, or you'll come out of it going, that's not for me, and you go off somewhere else. Yeah, that's what you got to do. Take the position trading bootcamp, go and apply it to the stock market and see if you can make money out of the stock market as a position trader. Yeah, you have to forge your own way, but the only way you're going to forge your own way is by trying everything. That's what I did, and that's how I came up with what I do. So thanks for the follow, guys. Max, Grant, welcome aboard. Go and spread the word. One curious question. How many years have you got in Forex? This is my 15th year. Again, it's all explained in the bootcamp. If you go watch watch day 1 in the bootcamp, the first bit of the bootcamp is about me. Well, it's not about me. It's not all about me. But there's a bit about me. There's a bit about me. It's in here somewhere. I don't know. There's a bit about me in there. I just basically, I used to trade stocks. That's why I say, you know, try it. I used to trade stocks. One of my mentors, one of my first mentors, I traded. I'll tell you where I started, right? I'll give you a quick rundown of it. This was the very first group I ever joined. Still going today. He's brilliant. Yeah, Day Trading Radio. This is where I started, and I cut my teeth, if you like. Yeah. So I started trading stocks, and I couldn't get on with it. So basically, I just found it, for me in the UK, it was difficult because I trade the afternoon. I have to trade in the afternoon. Yeah. So I tried that, didn't work for me. So I then went over and I found Forex. I tried Forex trading. Everything I did, I bought all the indicators, I bought all the EAs, I did loads of courses, and I stumbled onto a group in Forex Factory where a guy took me under his wing, and I went into a kind of private mentoring with him, and that's when it all started to click. Then I went back to stocks, and I've blown loads of accounts in stocks and in Forex and in everything. You have to. It's part of it. It's a rite of passage. If you haven't blown accounts, you're never going to make it in this industry, because the only way you're going to really know the pain of how this market can turn around and kick you in the arse, no matter how good you are, is when you blow an account. And then you suddenly go, right, that doesn't work. Why doesn't that work? When you've been kicked in the arse 5 times and you realize the reason is because you didn't get out of the way of that boot, that's when you start making money. And there's a process you go through, which is on the website, very important. 5 steps to becoming consistently profitable. Yeah. This is a free download. Just go and download it. You don't have to email or anything. But you go through these steps, and these are your learning steps, and you get to a stage where you think, I've cracked it. And then you go into what's called autopilot, and you just start trading. You just do stuff because you've done it millions of times. You know it works, and you're going to get kicked in the arse, but you just keep doing the same thing over and over again, and you don't think about it. Yeah, when the RSI gets extended above that level on the hourly, I go down to M5, I take a reverse alert, and I do this in, day out, and that's all I do, and it works. You get into that autopilot mode, but to get to autopilot, you've got to go through shed loads of crap. Or go and do the boot camp and hopefully fast track through all of that 15 years of crap that I've had. Not 15 years of crap, but loads of years of crap. And try and get to that autopilot as fast as you can. But you will not do it within a couple of years. I don't know anybody that's consistently profitable that's done it within a couple of years. Nobody. Sorry to burst your bubble if you've been trading for 6 months, but you ain't going to be profitable. It's just not possible. So I think it could be possible. But I think the thing that would make it possible is if you are landing on the strategy that makes sense to you the very first time. Yeah. If you suddenly go, that clicks. And if it's the first course you do that clicks, I think you can probably do it in less than 2 years. But what tends to happen is most people system hop. And again, on the website, there's a video about system hopping and why we system hop. And until you understand, I think this is a crap video. This is awful. I did this video years ago. I should redo it really, but go and watch this. And when you understand why you're buying indicators and courses, it will suddenly, this is the light bulb video. This will change you and you'll suddenly go, aha. Yeah. Humans don't like losing, as Michael's just said. Yeah. When you buy an indicator or you follow a strategy like the MACD, everybody does the MACD, everybody does moving average crossovers, all that sort of stuff. When you do all of that sort of stuff and you're using a stop loss, you're trying to get a 2 to 1R return because that's what you've been taught and it doesn't work and you've done it. And then you go to the stochastic and then you move over to the CCI and then you buy Agimat that draws an arrow based on other indicators which you've already used, but you don't realize it because this is just smoke and mirrors. And all this crap you go through for years and years and years. And you suddenly realize you're just hopping from system to system to system because you're losing money. You hate losing money. So therefore you go and find the system that doesn't lose the money. And you'll keep doing that forever unless you stop doing that. Yeah, all systems work. Every system. Anyone can give me any strategy right now and I will make it profitable. And the way that I will make it profitable is by removing that. That's why your system doesn't work. That's why your strategy doesn't work, because you put that in the market. That is an order to the market to say, take my money away, right? Any strategy, doesn't matter what it is, whether it's mean reversion, whether it's trend, whether it's breakout. There are only 3 types of strategy, those 3, yeah? You remove that, all of a sudden that trade becomes profitable. Why? Because if this thing goes up, it's got to come down when they profit take the move. Yeah. So when it goes up, don't get out with a loss. Wait for it to come back down again and get out with a profit. It's really, really simple. Every single strategy in the world out there, and there are thousands of them, every forum you go to, and there are thousands of them, all of them boil down to 3 simple things. The strategy is either a breakout strategy, a mean reversion strategy, or a trend strategy. There are only 3 ways to trade every single market in the world. Those 3 things. Every single one of those 3 strategies is broken down into thousands of variations based on these things. So what you're doing, if you're trying to find the perfect breakout strategy, is you're trying to find something you already have discovered, but fine-tune it using 1,000 different variations of this. Why are you doing that? Because the breakouts work. You know they work, but occasionally you get stopped out and you hate losing. So how do I get rid of those? Let's try a different strategy. I know what. Let's add another load of indicators. So I've got a really good strategy based on this indicator, but it's not quite good enough. So what should we do to improve it? I know. Let's add the bears power and the CCI to the RSI. And what we'll do is we'll use the same thing, but what we'll do is we'll wait for that to get over there. We'll wait for that to be positive. What are you doing? You're still trading a breakout. It's the same thing. You're just adding more complication. Yeah. The thing that makes you lose is your stop loss. Remove the stop loss, you remove the loss. Remove the loss, you remove the anxiety of trading. Remove the anxiety of trading, you remove the psychology of trading. Psychology is what kills everybody. Get rid of it. Job done. It's all explained in the bootcamp. It's really simple. That's my conclusion after 15 years of system hopping, buying every system, strategy, EA and indicator under the sun. None of them work. This thing here is random. It goes up, it goes down, and it moves through time. Those are the only 3 constants. Whether you try to shoehorn those 3 things into a breakout, a trend, or a mean reversion is entirely up to you. They all work. But none of them work if you put an order in the market that tells you to lose money. That is the only thing that fails. Simple. It really is that simple. And that's all I do. I get in the market and I get out when the market has got profit. And that's it. Nothing more, nothing less. You just find something that you can see happening regularly. which is why I use this. You know, and people slag off the RSI all the time. Oh, what a load of rubbish. Worst indicator in the market. It never gives you an accurate entry. Look, that was oversold. It started coming back down and it moved back up. I stopped out on it. No. It worked absolutely fine. You stopped out because you're an idiot. You put a stop in the market. You put an order in the market that told the market to get you out of the market with a loss. Absolutely fine. That worked perfectly. That one worked perfectly. That one worked perfectly. That one didn't work, worked perfectly. Yeah? RSI's rubbish. No, it's not. The fact that you put an order in there to get out of the market is what's rubbish. I got in and out. I made a load of money. Who's the idiot? The person that uses a stop loss. What do the banks do? They don't use a stop loss. What do the banks do? Make shed loads of money every single second of the day. Trade like a bank. It's really easy. But you won't learn that until you've been through 1,000 courses, spent 25,000 on education and bought every EA under the sun. I'm trying to just cut that bit out. Yeah, go and watch this. And yes, I sell indicators. I don't make my money out of this. I wish I did. If I wanted to make money out of this, I'd have to triple the price of them or quadruple the price of them. That's not what they're there for. They're there to help you identify stuff that you can see on your charts. Market structure. To me, it's really easy to see. Other people, it isn't. So I built an indicator to show it. Doesn't mean you have to use it. Yeah, get in on price action. As I said, yeah, get into the market when you get a break in whatever. Yeah, that low there, that candle there, right? Don't get in until that happens. What is that? Breakout. Ta-da! You're a breakout trader. What is that? Mean reversion. Ta-da! You're a mean reversion trader. Doesn't matter what indicator you use, whether you use a price action, use a market reverse alerts indicator, what the hell you use, it's irrelevant. What's relevant is there are 3 types of trading you can do, and you need to pick one and stick to it. I trade mean reversion, and I'm wrong all the time. But in being wrong, I'm right. I'm wrong on New Zealand dollar yen at the moment, temporarily wrong. I'm sitting in $400 a drawdown, 0.36% of my account I'm sitting in drawdown. It's irrelevant. It's a tiny, irrelevant amount of money. 0.3%, 36, 0.34, nothing. Yeah, doesn't matter, does it? I've got 3 trades. 2 of them are wrong. Am I getting out of the market with a loss? No, because that's stupid. Why would I possibly give the bank $300? Nuts. Why do we do it? Why do we do it? Because we're taught. That's what education teaches us. It teaches us to put a stop loss in the market. It's all wrong. All wrong. Try everything. Zootopia theme song by Shakira. ADR Aussie dollar Swiss. There's your first ADR hit on the Swiss pairs today. Okay. And it's that support. So this is a false breakout. I know it's a false breakout because this will trade back up into there at some point because there's a propulsion gap. Why will it do that? Because it does that all the time. I see it happen every single day. So I know it's coming back up here. So I know this is going to be a false breakout. So all the breakout traders who are short now are all going to get stopped out when it comes and tests that propulsion gap. I know that because I've seen it 1,000 times, but it took a long time to identify that. And the false breakout hasn't happened. I can predict the future. I can predict a false breakout before a false breakout happens. How cool is that? Any good broker you can recommend, Astro? I use Forex, but any big broker, Forex, Axie, DarwinX, just use a big one. Pick a big one that's been established for 10 years. There's no broker that's better than any other. You want tight spreads. Swiss yen, ADR, second Swiss. Hopefully my CAD Swiss trade is working now. Yes. There you go. So that's, what did I call? If you've been in here all morning, you will have heard me call this live this morning. I said, didn't I, what was going to happen? We're going to trade back up into this propulsion gap, and they're going to add to their shorts. Yeah, Papa, we're making gumbo here. I love the way you speak, Frank. Gumbo. Humans don't like losing. Yeah, that's what Michael said. But just like curious, this will be a stupid ask. There's no stupid question until you've asked it twice, Algo. When you ask it twice, then it's stupid. Again, that's what my mentor taught me. He didn't teach me about trading. He taught me about asking stupid questions. If you remove your stop loss and if the market spikes, won't you get stopped out by your broker? No. Look at the risk I'm taking, right? Look at the risk on I've got 5 positions on with a total of 8 trades, and my current risk exposure is 0.64% of my account. I'm not going to get stopped out, am I, by my broker on a margin call with a 0.6% drawdown. Most people are risking that on an individual trade because they're trying to get rich quick and buy a Lamborghini. I'm basically just waiting for the market to get to around about 1/4 to 1/2% of my account. And as soon as it gets to 1/4 to 1/2% of my account, I put it in the bank. Low risk. Again, all covered in the bootcamp. The smaller the risk, the less chance you've got of losing. Yeah. You're wrong because you can't time the market, right? You know, think about what you're trying to do as a trader. Where's my zoom button? Why can't I zoom in on this account? What's going on? Because I'm zoomed in, idiot. Wake up. Think about what you're trying to do, right, as a trader, is you are trying to time the market. Every trade you take, every instrument you trade, your job is to time the entry. That's what we are taught. We are taught to use systems, strategies, indicators to time an entry in a direction on something that is completely random and has a 50% chance of going up or down every time we hit the buy or the sell button. It's ridiculous. You can't do it because you're trying to predict the future on something that is random and controlled by 10 banks in the world. There is nothing that can predict the future. The RSI is extended on this. It does not mean this is coming down. It means the RSI is extended. It means there's been a strong push. I can see that. The chart's gone up. That is not the reason this is coming down. The reason this is coming down is because the banks have been buying the crap out of it and now they need to exit their position. When you buy, you become a seller. The reason it's starting to sell is because the banks are fed up buying it because they've got so much money in their bank, they need to exit it now and get some profit in their P&L. Yeah. The banks are doing exactly the same thing as I've got running here. They are in positions and they have the ability, obviously, to manipulate it, which I don't, but they're in positions. And when this gets to a positive 250, 300, 400, whatever, I will then sell those orders. Yeah. I'm buying the order. So when I get to where I want it to be, I will sell the order. It's just that because the markets are moved by the banks, what we see on these candlesticks is the banks' orders being placed. When the banks have placed their orders, they will exit the positions at some point in the future when they're ready. What we are trying to time as traders is when the banks will execute their orders. How the hell could you possibly ever know when a bank is going to execute its order? You can't. It's trying to predict the future of something completely random, controlled by 10 banks who are all fighting each other and trying to go in, push and pull in the different directions. Nuts. Never going to be able to do it. So stop trying. Just get in the market and get out. Stop trying to time it. Obviously, you pick logical areas. Don't just get in because you fancy it. Get in when something is triggered. A condition you see playing out over and over again. Get in when that condition is met. ADRs, RSIs. support and resistance, supply and demand, whatever you want to call it. Get in at points where the market has turned before. Why? Because the banks turned it there. There's a good probability the banks will do the same thing again. Find the bank's orders. Yeah, it's all the same stuff as you get taught everywhere else, except you get taught to put a stop loss in. Remove that bit and all of a sudden your system will work. If you've got a system or a strategy right now that you're looking at in here, it works. I can guarantee it. Try trading that system and strategy. Just remove the stop loss. Come back in a week and tell me how you got on. It'll work. It will work. Guarantee it will work. Because there's nothing wrong with the strategy. All these indicators tell you something accurately. The CCI tells you an accurate reading. It's just you can't get the timing of the entry right. But the CCI knows what it's doing. You just don't know how to follow the CCI because you put a stop loss in. It's crazy. It's obvious, but it's... we keep doing it, don't we? What's my exit strategy? So basically, I think I've just said it, haven't I? I exit, again, go and watch the bootcamp. It's all covered in the bootcamp, but I exit when I've got enough money to exit. So it will vary dependent on the strategy, but you know, 0.25%, 0.5%. So, you know, whatever percentage I fancy. So how greedy are you? That's how you get out. I've got trades, right? I regularly in live room, I'm trading in here and someone will come in and say, I just made 4.5% on whatever. And I'll be like, Jesus, one trade. You must have held that for ages. And people are holding trades for weeks, days, and they're just holding on. They're getting out with 4%. I'm getting out with 1/4 to 0.5% because I'm sketchy and I want to be in and out and in and out and in and out. I want my P&L going up and up and up. So I get out fast. I miss most of my profit. Yeah. If you go and have a look through, right? That was a perfect one, but forget that one. Have a look through at some of my trades and how much profit I leave on the table. I leave loads. That was pretty good. I can't find one now. I don't know what that is. That's obviously a price from another instrument. There you go. Look at that. Look how much. Look. In, out. Missed all of that. Look how much I got. Look how much the market's given me. Someone in here is sitting on this trade right now that's taken this trade and is still in it. Well done. Where's the exit? There. Disproportion gap. The market moves from propulsion to propulsion. It moves from order to order. Yeah. So if you look at this indicator, the WRB indicator, wide range bars, it's just propulsion gaps, basically, propulsion candles. These are institutional orders. When those institutional orders have been executed, the market will come back and retest them. Multiple reasons why it does it, but it does it. And that's all you need to know. Don't try and understand the mechanics. Just know that it happens. Yeah. So there's one, 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 and there's one. Yeah. Pushed up, pulled down, pushed up, made a propulsion gap, filled it. Made a propulsion gap on that move, filled it. Pushed down, retested, filled it. Pushed up, filled it. Pushed down, filled it. These two, filled, pushed up, filled, filled. Yeah, I'm not going to labor the point, but where do you think this is going? Why did I short that? Yeah. The targets are always going to be the areas the market's going to go to. Market structure. It's just market structure. Yeah. We keep going, making higher highs, higher lows until we don't. And then we start to make lower highs and lower lows. Yeah. On our way to these stops on the train. We just keep doing that and rinsing and repeating that over and over and over and over again. So where your target is how big your balls are. Yeah. Mine aren't very big, so I get out fast. But I like to get out fast. I like to be in and out and done. I like my trades to work. You know, you have that thing where you want to make money, but you also want to be right. I like to be right. I love to make money, but I'd much rather be right more often and not be sitting in drawdown. Other people are different, and it's all explained in the bootcamp. If you go to the bootcamp on day 4, I talk about somebody. If you go to YouTube, actually, somebody's sectioned these out. I don't know who did it, but somebody has been kind enough to. Wrong one. Sorry. This guy, he's done this on all of the on the YouTube version. Obviously, the bootcamp. He's done all of this. I should really put this on the website, shouldn't I? In fact, I might do that. I might steal all this, whoever did it. Thanks for that. But everything is explained in there about your comfort levels, yeah, and how to deal with drawdown is the main thing. So when you go into drawdown on a position, so I entered a position here and it pushed against me. Some people will get uncomfortable in that. I got another position on there. But your comfort level on drawdown is determined by your lot size. So the bigger your entry, the bigger your risk there, the more uncomfortable you will be. So a lot of position trading strategy is about making sure that you keep this figure within as much of a comfortable level as you can, and you adjust your lot sizing for your comfort level. I'm comfortable in 10 to 15% of drawdown. Some people are hideously uncomfortable in 5% of drawdown. Underlying inflation pressure suggests we should hike rates further from the ECB after our March meeting. Yeah, so that's just confirming that we're going to get another rate increase in May. So how you feel is dependent on you as an individual, and you can't answer that question until you do it. But what I recommend is small risk. So for me, what I use is 0.25% per entry, somewhere like that. So I risk 1/4 of my balance on a half ADR move. So what the market's got to do is when I get into a trade, for example, let's say I took a long position here. Let me just move that down. So if I take a long position here, when the market has moved half an ADR down against me, so roughly down to here on the hourly chart, I will be in 0.25% of drawdown on my account. It's nothing, is it? You're used to risking 0.5%, 1%, 2%, whatever percent on one individual trade. That's why you get uncomfortable when you go into drawdown, because as soon as you press the buy button, the spreaders put you into $20 a drawdown or whatever. You're like, oh my God, you're on the back foot immediately. If you risk a small amount, what you can do is it allows you to get in again. So, because what can't you time? The entry. Why can't you time it? Because it's random. You're trying to predict the future of a random event. You can't do it. So stop trying to time the entry. Get in. If the market goes your way because the banks have decided to push it higher, get out. If the banks decide they want to push it the other way, get in again, and then wait for banks to push it the other way. Because as long as this thing does this, which it does all day long and has done for over 100 years, you will be able to get out of your position. But if you get in here with 1% risk on half an ADR move, and it goes down half an ADR, and you get into another one and it goes down another half an ADR, you're suddenly sitting in 3% of drawdown on 2 entries down here, and you're crapping yourself. So don't do it. You've got 28 instruments to trade. Spread your risk very, very thin. Your exposure needs to be spread across multiple instruments. So you need to get in with tiny position sizing. Stuff that it doesn't matter, yeah? So, get in there and press the button. And if it goes down by 1 ADR, right, in this case, if it goes down by 47 pips, you should, at that point, go, whatever, don't care. You shouldn't have any emotion at all involved. If you have emotion involved, you're in trouble, because emotion kills you. Psychology kills traders. Emotion kills traders. Remove the emotion, you will remove the fear, and you will just see the market play out. I got in there and I was hoping it was going to pop straight down and I was going to get out. What happened? It went up. What did I do? Well, I didn't do anything. The EA did it, but EA got me in here. And at that point, I was sitting in probably 0.35% of drawdown by the time we're up there. And then it came down and I just got out with 0.5% of profit. 0.5% of my account. In this case, $500. But do I, at that point there, I wasn't going, oh my God, it's gone up. I was like, fine, well, I'll get in again if it goes up to there. Because if it goes up to there, I'll be something like 0.75% in drawdown. So I've taken 3 trades over 2 days. Worst case scenario, it's got nowhere near what I would normally risk on a trade if I was using a stop loss. Ridiculous. If you're getting with 1%, yeah, you're going to crap yourself. But don't do it. And what gives me confidence that I'm not really bothered if it goes up there? This thing's extended above that level. Yeah. Going back in history, what happens when we get above that level? Pop. It comes crashing down. What happens when we get down there? It goes flying up. What happens when we get up there? It comes crashing down. What happens when we get up there? It comes crashing down. Can I time when it's going to crash down? No. So don't just get in. Wait. Because it will. You just can't time it. Because why? You're not a bank. You're not steering the bus. So just, you're a passenger. Accept it. Get in. Accept that this thing is going to go where the hell it wants. And you cannot get off until it stops. Very good analogy my one of my mentors used, which stuck with me and really, really was the light bulb moment. Every time you press that button, imagine yourself in a train station and you're getting onto a train. When you press that button and you're on that train and that train pulls out that station, there is absolutely nothing you can do until you get to the next station. The next station is either going to be a profitable one or an unprofitable one. When you get to that next station, you have a decision to make. Yeah. Are you going to stay on the train or are you going to get off the train? If you get off the train, you've got to walk the rest of the way and it's going to be painful, i.e. you're going to lose money. Yeah. If you stay on the train, at some point that train's going to get to a station where it has to turn around and come back the other way because passengers want to go the other way. Wait for the train to turn. Yeah. You have no idea how many stations there are until the terminus before that thing turns around. You know it's going to. Why? Because it does it like clockwork. That's all it does. Its job is to go up, down, up, down, up, down. A train's job is to go to that terminus, turn around, to that terminus, turn around, to that terminus, turn around. This is your train. These are your stops. Sometimes it goes a lot further because you've got on at the station right at the start of the train journey. You've no idea how long the train journey is going to be. But you do know the train journey is going to end. Yeah. And sometimes the train journey will be so long, you will have to be in 7 trades. And you'll be sitting in 3 to 5% of drawdown on your account on one instrument. And it will be painful. But it won't happen very often. So that's basically position trading in a nutshell. You mentioned courses on news trading. Any recommendations? On news trading, no, I haven't. I don't trade news, and I would never trade news. Oh, well, I do trade news, but I don't trade news as in try to make money out of news, like make money out of news. Just don't do it. It's too dangerous. But on fundamentals, there is a course on fundamentals which explains the basics. I'm just trying to find who it is. If you want to learn about news, obviously it's just fundamentals, isn't it? So I can't remember who it is. God, I'm looking through some of the old strategies I used to trade. Wow. Uncle Lee's Pip Hunter. Uncle Lee, that's not me. That's just somebody else called Uncle Lee. And when I actually picked it apart, it was 2 other indicators telling you the same thing, drawing an arrow on the screen, which they all are. Forex scalper. I can't remember the name of the guy. not him. Probably threw it away. But no, I haven't really on news trading. How easy or hard is it to work out the ADR of a pair by yourself? Is there a website that gives you the information? You've got an indicator that tells you, built in. It's called ATR, right? Average true range. If you put ATR 10 on the daily chart, yeah, this will tell you the ATR. So at the moment, the ATR, as you can see down here, on the daily chart of the Euro Swiss is 48. You probably can't read that, but it's 48. Yeah, ATR, my indicator, is 47. My indicator's got a slightly different way of calculating it to ATR. ATR calculates it based on now, back 10. My indicator takes the last day closed minus 10. So you know, the difference between if this said 45 and that said 51, it's somewhere in the region of 45 to 50. It doesn't matter how accurate it is. ADR is a measurement of movement, roughly. Just because it's ADR 47 doesn't mean it's going to turn around at 47 pips. It's going to turn around when it gets roughly extended. And that extension is going to be whatever that extension is going to be. But that's all this is doing. My indicator, it plots ADR with a slightly different calculation to ATR, but in effect it's pretty similar. And it just draws the lines on there. But the important thing that the indicator does is these lines move throughout the day, because ATR, or ADR rather, when you get to ADR as an extension, it's because we've pushed down and then pushed up. So that is your ADR measurement. It isn't taken from the open of the day. At the open of the day, yes, the lines will be one ADR apart. But as the day moves, the ADR will move with it, because it's measuring a movement up and down of its average. Again, all explained in the ADR video on the website. So if you go to the ADR indicator, that explains it. And that explains all the 25 years or whatever of backtesting I did, all the maths behind it, everything. All the boring crap you don't need to know. But obviously Google is your friend as well, Tony, if you want to Google it. Jake, interesting stuff. What percentage per trade do you put on? I think I've probably just answered that one, haven't I? No stop loss is difficult at first to adjust to. Breaking years of programming was hard for me at first. Now I work market very different. Winning now. Exactly, Franco. So a lot of the people that have been in here for a while are executing position trading, but a lot of people are doing it in a different way as well. Yeah, there's more than one way to do it. You can apply this theory. This is a methodology. Position trading. It's not a strategy. It's a methodology. So as I said here, you can apply this methodology to other markets like gold, indices, or crypto. You can also apply it to your strategy. So if you have a strategy that is based on ATR and our friend MACD, where are you, MACD? Bollinger Bands, I don't know. That's average movement. Let's use Bollinger Bands. So if you've got a strategy that is based on Bollinger Bands and ATR, you can apply position trading methodology to it. Because all position trading is a mean reversion management system, if you like. That entry there on the Bollinger break, yeah, if it doesn't work, all you do is you wait for the next Bollinger break and you get in again. So you got in with a Bollinger break there, you got in with a Bollinger break there, you got in with a Bollinger break there, you got out. Yeah? So that is position trading Bollinger strategy. Just made it up as we go. That's what I said. Anybody in here right now could give me any strategy under the sun and I can make it profitable by literally removing one item from the strategy. Yeah, so it's a method, not a system. A method that makes you money, as Franco just said. I was always thinking, if banking trade against each other, or like they talk on the, and then open all same positions because they are different banks around the world. Not sure about that. Don't understand that, but the banks, your banks trading against each other. Yeah, right. So banks, basically, there's 10 major banks that run the FX market. The FX market is what's called a closed market, in the fact that there is a lot of OTC transactions going on interbank. Yeah, so OTC stands for over the counter. So most of the transactions that happen in Forex are over the counter, i.e., all right, John, how you doing? You got any US dollar to sell? Yeah, I got loads. All right, give me yours and I'll give you mine. Brilliant. Bang. We never see that candlestick. Doesn't exist because John and Bob did an OTC transaction. There is no centralized exchange for Forex in the way that there is for futures. So with futures market, you see every order. Your orders that go in to the futures market are all monitored by the CFTC. Yeah. So every time you place a trade, the CFTC know about it. It's logged. This is why we use the data from the CFTC in the form of commitment of traders, the COT report. So this is every position currently, or not, this is a bit delayed data, but this is the overall market positioning on these instruments. Yeah, 67% of the futures orders are short the Canadian dollar. Yeah. So the banks obviously all transact with each other. So if I've got $100 million worth of, or 100 million euros, I need to convert into Swiss francs, I need to find someone that wants to sell 100 million of that in the opposite direction. Yeah. So they trade a lot of OTC to just get orders done. At the end of the day, there's not always going to be the right number of orders. So they need to execute those in the Forex markets and do those orders on behalf of their clients and find someone else to take the order. That is in the form usually of liquidity pools, which are placed by institutions and retail traders. So if there's a lot of that needs to be done and they need to get those orders done, they don't mind if they get a price there, or there. They just need the orders filled. That's why they move the market. That's why they're called market makers, because they make the market. They go, I have 100 million euros, out to the rest of the banks. The banks go, yeah, I'll take some of that. I'll have some, I'll have some, I'll have some, I'll have some. Brilliant. I've got 500,000 left. Anybody else? No, we're out. All right. Well, let's go and find someone that's got some orders. But the banks, you'll have Barclays wanting to do that, and you'll have Credit Suisse wanting to do that. You'll have Citibank wanting to do that. So if Citibank and Credit Suisse wanting to do that and Barclays are wanting to do that, who do you think is going to win and which way is price going to go today? Down. Have you got any way of forecasting that? No. Stop trying. Simple as that. This thing is a random beast run by 10 institutions that have the power to move it based on what their clients are. The chain of events that goes into a candlestick going up or down is huge and totally uncontrollable. So all you have to do is get in and understand that the market will cycle because it has to make money. And as long as that happens, we just extract it when it gets to a level that we can extract it from. And the banks are all fighting each other as well. But they're also helping each other. You know, this is what I mean. Think about a normal market that is selling fruit and veg, for example. If you've got a guy in that market and it's getting to 4 o'clock in the afternoon and he's still got 2 trays of apples left and he needs to get rid of them, what's he going to do? He's going to dump the price on them to make them more attractive, which means the market price for apples will go down. More people will buy up those apples until he's run out of apples. When he's run out of apples, the market won't go down anymore. So all the people that have bought those apples are now making apple pies with them, and now they need to sell their apple pies. So then the market goes back up again. I just made that up. But you get the point. It's a market like any other. There's buyers and the sellers, and that's all you need to know. You just don't know which way they're going to go and when. And the whole industry revolves around trying to find a way to predict that, which is utterly pointless. I wonder who your mentor is. I've had lots of mentors over the years. As I said, Day Trading Radio was my first. I can't remember the guy's name. Can't remember his name, but he's really good. But he stocks. Another big mentor of mine was Kunal Desai. You might know him as Bulls on Wall Street. Again, from stocks. Bulls on the block. Yeah, Kunal is an awesome teacher. Again, tells it like it is. He's brilliant, Kunal. But I paid Kunal thousands. And Paul's awesome as well, if you want to do stocks. But, and then I've had many mentors on Forex Factory. Various people. But none of them made me profitable. They all taught me something. And that's what the bootcamp is, yeah? This is an amalgamation of 15 years worth of paid education. What works, what doesn't, and what I made of it. But most people who sell courses are scalpers. Kunal is very cool dude, very funny. Yeah, he's awesome, Kunal. But, Kunal's a scalper. Kunal scalps NASDAQ and stocks and trades earnings, yeah? It's hard work. I'm not a scalper. I can scalp, and I do scalp successfully, but it's not what I like to do, because it's absolutely hideously labor intensive. Look at this. If you're trying to make money out of this today, right? You can't. You either caught that, or you didn't. If you didn't make money today. You lost. You got chopped. You're either lucky or you weren't. Hard work. Which way is this going next? Yeah. Think about what scalping is. Scalping is pressing a button, trying to predict the random outcome of a 5-minute candlestick, which is random. What are your odds of scalping success? Yeah. It's always 50-50. What I learned from Kunal, and the reason Kunal makes money, is he has an edge based on the underlying strategy of the market open, based on earnings. Yeah. So he has no idea where this is going. He has an idea which has an edge, the same as the opening range breakout or a gap fill or a wide range bar fill. It's just an edge on something that happens sometimes, but he's good at money management. He's not a good trader in the fact that he can predict the direction of a candlestick. He's a good trader in the fact that he does not take a hit very easily. And when he does take a hit, he comes back from it very fast. I've been in Kunal's live rooms when I was in Kunal's live rooms years ago. And I remember him cutting streams short. I've had enough. Bang. I've lost 25 grand or 7 grand or 10 grand or whatever. And he just cuts the streams off. And he's going off because he knows he's got to go and scream and shout and get in his Porsche and drive it at 100 miles an hour to get it out of his system, come back and go, right, that all happened yesterday, reset. And if you haven't got that mentality, you're not going to be a good scalper. I haven't got that mentality. I find it very difficult to come back from a loss. So, not for me. But I learned a lot. Candlestick patterns, brilliant. I have used RSI by drawing trend lines and waiting for trend line breaks. Yeah, if you use that, Christian. The only thing I would say about trend line breaks is you miss a lot. So what you're doing is you're You can use trend lines on moving averages on RSI. A lot of people, is that what you mean by doing that? Yeah, I mean that would work as a strategy, wouldn't it? Yeah. So if that was to break down there, you're getting short. But what do you do if it goes up? You get stopped out. Yeah. So use the same strategy. But what I would say is try when that does that. Try not using a stop. And then waiting for RSI to go up again, draw a new trend line, and then get in again on the next one. And then get out of your trade. Yeah. So use that strategy. As I said, any strategy works. All strategies work. Sometimes. The problem is we are looking to try and make our strategies work as much as possible. We're trying to improve our strike rate. We're trying to improve our risk reward on our entries. Forget all of that. And just get in every time you get a signal from your strategy. Just get in. Because the market will go like this. So if you get in and you're wrong, the next time you get in, you've got more chance of being right. Because if it hasn't come down, the chances are it's now going to be even more stretched. Again, all covered in the bootcamp, elastic band theory. The more stretched this thing gets, look at the pound New Zealand. Prime example, Friday. Oh, not Friday, it was last Tuesday, wasn't it? I said, I don't know which live room it was. I said, probably on the Tuesday, this thing's going to come down like a house of cards. And I said, I remember being up here on Tuesday saying, any minute now, this thing's going to come down. Look at it. How do I know that? Because we're extended above the 80. What's it done there? What's it done there? What's it done there? What's it going to do now? What's it going to do now? I don't know. It could go like that, couldn't it? But if I got in here and it went like that, I'll get in again, because what would that be? Up here. When's it ever got up to there and not gone like that? Hasn't. Yeah, but I'm not going to take a stop on it. I'll just get in and I'll get in and I'll get in and I'll get out. You can do that with any strategy. If you had a trendline break strategy here, this is a good example of a trendline break strategy failure. Look at that. Lovely trendline, right? You got in short. It went up. You got stopped out. Yeah. So you got in there. The next time it broke was there. So if you'd have got in there, waited, and then got in there, you'd have got out with a profit. Yeah. Any strategy you can think of can be instantly made profitable with the position trading methodology. Just change the stop loss and you change the outcome. So I'm getting lost in the chat now. There's loads of chat. I feel like CAD Swiss want to make a new low. I bloody hope so. I'm on it. It's not going anywhere. It's stuck. Yeah, this is half a problem. You know, it's stuck. You have to sit through this all the time. The only reason I'm using the stop loss here on this fiddle crest, by the way, I'm preaching not using a stop loss, then I'm sitting there with two stops in the market. This is an evaluation account. This is prop. This is totally different. Different strategy, different thing. Mr. Brightside, 78 watching, 57 likes. Not bad, but could be better. 58 likes now, there you go. And 81 watching, that's good. I like having 80 odd people in here. It's good because we get lots of chat going, don't we? I get a chance to waffle, hit the like button, subscribe, all that stuff. Oh, I've missed Magnus and Jake. Welcome aboard. And Grant. And Max Power. I keep missing all the likes just because I'm waffling. Welcome aboard. Welcome aboard the crazy train. Pound US stances. You've probably gone now. I have covered pound US already. It's a short at the moment, but it's not going anywhere. It's not set up for anything right now. We are contracting, obviously. So it's looking at that. This is a Canal. If anybody's done Canal's course or has been in Canal's live rooms, well done. $2,000 worth spent. But this is one of the things I keep saying in here, right? And I got this from Canal. Yeah, if you knock on the door 3 times, the next time you're going to smash through it. Yeah, there's only so many times you knock on the door before that door gives way. Yeah, and that's what a wedge pattern is. Yeah, we are contracting. There's more sellers in this market at the moment than buyers. However, there's a very strong level that the buyers are interested in holding for some reason. However, there's more sellers in the market. Yeah, every time we knock on this door, we're shoulder barging the door, shoulder barging the door, shoulder barging the door. Hinges aren't going to hold it forever. I think it's third. I think his saying, I can't remember his saying now. Now I've said that. I think his saying was 3rd time's a charm. So I actually think it's more like 4, but maybe it was 4th time's a charm. But anyway, a drop at some point. Everything fundamental is short on it as well. So if you look at the fundamentals, the directional bias, scorecard, pound US dollar is a short. We're just waiting for retail to come on board, basically, I think, on it. They're all the wrong way at the minute. Yeah. It's -6. Retail are short at the moment. So the market is pushing or trying to push higher. But as you can see, it's failing. So I think it's coming down. I'd be shorting it. Reversal alert on M15 is just about to hit this morning, but it's not. Actually, it's hit already, isn't it? Oh, no. Oh, we didn't make a new high today. Yeah, so you're just about to get a structure break, basically, of that level there. Who's that just joined? Monkey Man. Good name. And Ahmad. Ahmad Official. Oh, that sounds official. Ahmad Official. Welcome aboard. Who is the mentor that told you to put 1,000 hours into this information and chart time before he teaches you? That was Strat on Forex Factory. So I had to read, before Strat would mentor me. This is why no one gets mentored by Strat. He's not doing it anymore, so you don't go off to Forex Factory and pester him. You can't do it. But this is where I got this from. Yeah, this is called the Strat Shadow. This indicator. It's not actually called the Strat Shadow. It's called moving average in color. But this is his indicator. Well, it's not his indicator. It's the indicator he uses, basically. It's just, all it is a moving average shadow. It's nothing special. It's nothing new. It's nothing complex. It's just a moving average shadow. This is called, nicknamed the Strat Shadow. So on his forum, he had a forum which was, I don't know, 4 years old, something. When I got to it, I don't know how old it is now, but when I got to it, it was about 3 or 4 years old. And it was thousands of pages, literally thousands of pages. Every time you ask a question in his forum, it would be, have you read the forum? No. Read the forum and come back to me. And everyone would be like, yeah, but that's like 1,000. That's going to take me weeks. It's like, yeah. Everything you need to know is in that thread. And you ask questions until you go, right, screw it, I'm going to read it. And I went through the whole thing and I came back to him and I asked him a question. And the question was something new. And he was like, you've read it? I was like, yeah, you know everything, don't you? Yeah, brilliant. That's when he took me under his wing, because I'd proven the fact that I was serious about doing this. That was why he wanted you to read the thread, not to find the answers, but to prove that you would spend 2 weeks reading his material and you are in for the material. Right, I like this, I'm in for it. I've spent 2 weeks reading this. He asked me questions, and if I didn't know the answer to the questions, go back and read the forum. It's like, that's why I came up with the word bootcamp. That's what it is. And that's why I send everybody to the bootcamp. Ask a question, answers in the bootcamp. Ask a question again, it's stupid. Go back. Everything you need to know is in that bootcamp to make money in this market. If people come back and ask questions that are answered in that bootcamp, I send them to the bootcamp. I'm not going to waste my time with people that aren't interested in investing time in this business, because it's bloody hard work and you've got to put in the hours. After I got accepted as a mentor, he told me I needed to have 10,000 hours in front of the charts. Chart time, watching this thing. I need 10,000 hours of watching this thing go up and down, right? I was like, what? How am I going to do that? Because until you've seen this thing do this over and over again, every time it does something, it does something else, you won't understand price action. So I had to go and basically spend hours and hours in the strategy tester watching months and weeks of information fly past. And what did I get out of that at the end of the day? This baby. I realized that, hey, every time this gets up there, it comes back down again. Not every time. A lot of the time it gets up there and it carries on going, but eventually it will come down. What goes up must come down. But I saw it 10,000 hours in a trot. You know, it's that sort of education that makes you suddenly realize it's not the indicator, it's not the system, it's not the strategy. It's understanding how this thing works and being able to extract money out of it. What he was taught by his mentor, I'll show you Euro US dollar to explain it in a nice, easy way on the daily, right? His mentor taught him, and his mentor worked in a bank, funnily enough. His mentor taught him that when this thing turns red, you sell it. And every time it pulls back, you sell it. And you keep selling it while it's red. Yeah. When it turns green and you lose, you get out and you go long. And if it goes red again, you get out with a loss and you go short. And you keep going short until it stops being red and turns green. And the last trade you take will always be a loser. And then you start going long. And then you keep going long every time it pulls back. And you keep going long until it turns red. That's his strategy. Simple, isn't it? But it uses one indicator, a moving average. Nothing else. What's my indicator use? My strategy use? One indicator and then a signal, a structure to get in. Yeah. The simplest strategies in Forex trading are the ones that work. The ones with multiple indicators that draw arrows and pings and whistles and all that sort of crap. None of it works because none of it's got any hope in hell of predicting the future. You do what the market's doing. You go where the market's going. And if you're right, you make money. And if you're wrong, you just wait for the market to go where it's going. And you get out. That's it. It's that simple. But it's all about learning how to make money in this market. It's not about finding the right indicator. It's not about looking for the holy grail. It's not about system hopping. It's about just trading and doing it. In, out. But you never know which way it's going. So you just got to stop hunting for that indicator, that strategy, that EA, whatever. Stop. It's not out there. Hoping for the best. Usually only at the 20 and 80 level test. I was talking about something else back then, obviously. Seymour, 20 years ago, I spent 2K to trade with Vince Stanzione. That's a good name. Only now I realise how poo it actually was. But I did get to meet Jim Rogers, who was really interesting to talk to. All courses are crap. Literally, all courses are crap. All of them. I had to leave all Telegram groups. I seem to attract sponge traders. Give me, do for me, let me copy. Pick up the bloody book, you lazy. Yeah, exactly. I'm exactly the same, Franco. The reason my Telegram group is so quiet is because every time someone says something, I pretty much shoot them down. And that is because I did Strat. That's because Strat shot me down all the time. And you know what? I sit here as a profitable trader because he told me to go and find out myself. Don't be such a lazy arsehole. The answer to this is out there. You just need to find it. So all I've done is I've just amalgamated all the answers I found. But the reason all courses are crap, which is what I was just going to say, was because there is no strategy out there that suits every trader. So you've got to find the trade strategy that suits you. Yeah. So if you hate the RSI and you want to use something else, do it. If you hate the moving averages, I hate moving averages. The only reason I use them is for a quick reference. Euro US dollar's going up. That's it. I'm not trading bounces and stuff. Yeah, it does bounce off of these moving averages, but because these are very specifically designed and picked to show when the institutions are moving. But use any indicator you like. Just change the methodology. what everybody will teach you is the way that they make money in the market. You give their strategy to 100 people, you will get 100 different results because everybody will interpret the strategy differently. Drawing support and resistance. Where do you draw it? There. No, you don't. You draw it there. No, you don't. You draw it as a block. Yeah? There's 3 different ways to draw support and resistance in the market, for God's sake. It's totally up to you when you press that button. But you don't make money because you press the button at the right time. You make money because the market moves, luckily, in the direction that you are wanting it to go when you press the button. It's what you do after the button press that makes you the money, not the pressing of the button. Because pressing the button is a totally random 50-50 odds chance, isn't it? What's it going to do now? We don't know. It might just start dancing with wolves. There you go. It'll do what it likes. You know, this CAD Swiss that I'm in, I have no clue. It's going up again. Yeah. I don't know where it's going to go at all. I might get out. I've had enough of it. It's boring me. It's not doing what I wanted. The idea of this trade was, the reason I took it was because the Swiss franc had a positive PMI. My last chance was a retest and the sellers to add. The sellers don't have any momentum today. There is no traction in the market. The sellers are just not able to take control. There's more buyers at the minute than there is sellers. John Wick has entered the building. Look, here he is. Look at the hours. Look at the wicks on the hourly. Look. Yeah. Look at the wicks to the downside. Yeah. It's way more buyers than there is sellers at the minute. That could change any minute, obviously, but you know, it's not looking great, is it? Is your trading strategy works on time zones, all time zones? Yeah, everything works on any. My strategy for entering the market is based on the relative strength index. So yeah, in my strategy, I mean, the relative strength index, yes, works on any time frame. However, the degree to which it works as a successful entry method is much weaker on lower time frames. The reason I trade H1 and H4 is because simple fact, I don't know anybody that consistently makes money on low time frames. And every mentor that I've had that is not a scalper, that is profitable, uses the hourly and the 4-hourly time frames or the daily. Yeah. Everybody that's wanting to buy a Lamborghini is trading M5. And there are very few people in this world that can trade M5 successfully. Tom Hugard is one of them. Canal Desai is another. I don't know anybody else that makes money M5 consistently. Tom had a nightmare. He lost 40 grand on Friday. You know, you need a specific mindset to trade that way. Everybody I know that is consistently profitable uses the hourly charts or the 4-hourly charts, because this gives you an indication of where the market is going, has been. Yeah. This shows you what the current day's order execution is for the algorithms that are currently running. Yeah. This is totally random. This has some degree of order to it, but more importantly, this is a better way to measure the strength of a move, because what's going on in 5 minutes is this. Yeah. And you can make money out of that. It's going up and down, right? It's going up and down, isn't it? But you change this to an hourly chart and what you see is that. Yeah. You know that when that's done that, that's got to do that, because that's what it does. Yeah. On the lower time frame, on a news event like the Aussie dollar Swiss, for example, that RSI has got massively extended below the 20 level. Have we gone up? No. And before everybody shouts RSI divergence, Yes, there is RSI divergence, which you can use. However, look at it on the hourly chart. Isn't that much easier to get into than having to sit through the pain of this thing going, oh, what a beautiful entry. What the hell? All morning. It's just, it's clean. Support, resistance, supply, demand all works so much better, so much more effectively on the higher time frames. So that's where I use, that's where I sit. I sit on H1, I sit on H4. H4 is my bread and butter. The most stable, the less drawdown, the less squeezy, the better entries. And using the lower time frames to wait for signs of strength. But I'm not trading because I get a 4-hour RSI ADR market structure reversal indicator alert. I'm trading 4-hour time frame because it's extended. I just get in on a small time frame. Because if you think about it, right? Price action. I was taught to trade price action at support resistance, PASR. That is a great PASR trade, but there is signal that I would get to get into this would be that. Price action at support. Yeah, by the time that price action has happened, and I get in, on the lower time frame, I've had a move that I could actually have got out of. So by entering here, you can get out on that one bullish engulfing on the 4-hour. That's a big move, yeah? 32 pips. ADR on this is 45. I'm looking for half an ADR, which is 22 pips. So if you wait for the price action, you've missed the move. And that's where I suddenly went into multi-time frame analysis. And that's why I use it. Because I realize I can get in and out very, very quick. And yes, this thing could go bang, 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 bang. But I'm not a swing trader. I don't swing. A lot of people do. A lot of people position trade swing trading and make very good money out of it, but not me. It's not my style. It's all the same thing though, isn't it? All the same thing. You just got to find your thing. That's why I say all courses are crap. Because if I teach you to trade the way that I trade, you'll think that's way too fast. I want to get on the bigger moves, and you'll take the bigger moves. Absolutely fine. That's your way of trading. You probably make way more money than I will. I just make it very, very consistently. And I can't wait. I've probably got OCD or attention deficit disorder. I can't sit in the trade that long. It drives me mental. I'd rather be getting into another trade. Yeah, there's 28 instruments. There's lots of opportunities out there for me to get into other positions. Why would I want to sit in euro pound when there's a chance that that could disappear? I'll take that, I'll put that there, and I'll get into something else. And the euro pound trade, which I'm in at the moment, as a long here, this thing could well fly and probably will test that high. But I'm not sitting in that. Because so many times I've seen this thing go like that and like that. And I just don't want to take that chance. I would rather just get that thing green and get the mortgage paid. Take the money. Don't be greedy. What's one of the things that kills people? Fear of missing out and greed. What's that? Swing trading, I think, is just greed. It is. It's greedy. Swing traders are greedy. Nothing wrong with it. Greedy people make money. Can you show how to do this with US dollar yen during February? Oh, there's a test. February on US dollar yen. I only took one trade, which was a sell up there. But so let's say, for example, you're trading the 4-hour. Where are we? February. Yeah. So depending on which way you're trading, yeah. So what's your bias? US dollar yen would be long bias. So you'll be looking to take longs. So that would have been the only entry really, on H4. Yeah, US dollar yen's a massive long. So buy, all right? So we're looking for longs. However, if I was trading short, I would have got in there on an H4 RSI extension. I wouldn't have taken 2. What's the ADR on this? 54. We need half an ADR. Oh, yeah, I would. So I'd have taken an entry there and an entry there, and I got out on that. If you were going short, again, you'd have got in somewhere around there. Maybe there. Out. You would have got in again there. Oh, there you go. There's my trade. Look, I can show you that one. Look. Yeah, so got in there. RSI extended, and I got out. Yeah, this is what I mean. This is why I'm in and out fast, right? If you're counter trend trading, in this case, which is what this trade was, you don't want to hang around. You want to be in. You want to be out. You're in. You scale in. You scale out. You get in and out fast. Quarter of an ADR to half an ADR, 27 to 50 pips I'm looking for. That's all. In and out. RSI is extended. I'm expecting a profit take move. How far is that profit take going to move? I don't know. But if it moves far enough for me to grab 0.25%, done. That's it. 0.5%, whatever. On the hourly chart, same thing. So RSI extension there obviously would have been long. So you'd have got in there, and out. Depending on which levels of RSI you're taking, and again, up to you, you'd have got in there. Probably wouldn't have got out on that trade. It's a bit tight if you'd have got in on it, that is. So you had an entry there as well. So you'd have got in there, you'd have got in there, and you'd have just been scaling into it. So you'd have got in there and you'd have got out there. That one was a simple one. Took 4 days though. And then you got obviously that one there. Yeah. Make sense? So you scale in. You're scaling into the position, taking multiples. I'm just trying, let's find one that's got multiple trades on it. I don't think there's any this week. That there's only that one there. Look, there's 2 trades there. So there's my entry, H1 RSI extension. There, in those 4 candles there is an M5 reversal alert. Drop down onto M5. There's an M5 reversal alert in there. Okay. Didn't work. Flew. Absolutely flew. There was no reverse alert in there. If there was a reverse alert, it was too close. It was less than 62 pips away. So wait for it to get up. Took the reverse alert. That's the first sign of short selling we had after that entry. Yeah. Market came down. Profit take on a 2-day move. I got out. Way too early. But I got out with profit. RSI extended. Did it work? No. Terrible. Second one did. Don't take a loss. Take a second. 1 entry, RSI extension, out. I'm now short because RSI is extended. Yeah, it's probably going to push up to there. So I need to take a second before I get out. But as long as the market structure is there, as long as the buyers have to get out of their orders with sells, that will go up and down. As long as that goes up and down, I will extract cash. So you tell us to go to the bootcamp every time we ask in Telegram. Big Papa, yeah. No, I do answer questions in Telegram, yeah. I do answer questions in Telegram. But the Telegram group is there really to help with questions about position trading. But I hope that I don't get many questions because I explain it so well. And I do get told that the bootcamp is really easy to understand. So I think hopefully the answer I don't get questions, the reason I don't get questions is because it just makes sense and people are just out there doing it. But the Telegram group is really there for support with the indicators and the EAs. And I get more DMs, way more DMs than anything in there. People DM me all the time. But I come across as probably a grumpy old git in there. But it's only because I get asked the same question every time, over and over again. And the answer is always in the bootcamp. And I know, and this is what Strat taught me. And the way he taught me, it's like, why are you asking that question? You know the answer to the question. I can't remember. Well, go and look it up. Well, can you not just tell me? Don't be a lazy toad. Go and do it yourself. There's this thing out there called Google. Somebody asked me the other day, I've got this lovely website now, which I found, which is called Google That For Me. So somebody asked, I've been watching the videos on YouTube. I need a PDF on market structure. So I sent them this link. Oh, it's gone in the wrong window. Sorry, this one. It's brilliant. Let me Google that for you. I'm not doing that. This is look. It's brilliant, isn't it? So you basically send somebody a link and it Googles it for them. It's like, it beggars belief. I've been sort of programmed that if I need something, go and Google it. Go and find the answer. It's out there. If you go to a forum, the answer to your question is out there. You're just not very good at searching. But I do answer questions. That indicator looks like Godzilla back in the green. I like it. Yeah, is that the? That was probably the Strat Shadow. I can listen to you for 10 hours and never get bored. I bet you could. You'd have to get the Wick pick out. Put on a t-shirt. Yeah, get John Wick put on a t-shirt. It could be a merchandise sideline. John Wick. I don't know if I'm allowed to sell that. Yeah, because I created this. All these images. I created these. Oh, there's Neo. Using artificial intelligence. So who owns the copyright on this? That's a question. So I created these using AI. Who owns these? If I got that printed on a t-shirt, because that's not Keanu Reeves, it's not John Wick, it's a bloke in a shirt with a beard looking at a chart. The fact that I asked for John Wick trading to the AI and that's what it gave me, who owns the copyright? Tricky one, isn't it? It's a tricky. Can you please check Silver, new subscriber? Welcome aboard, Commando Mike Gaming. Good name, Commando Mike. RK Jewels, you want to know about silver and gold? I don't trade those, but they're the same as everything else. They are crosses. So I'm not going to do silver because I haven't got it here, but gold I'll show you. It's a cross with the US dollar. So if the US dollar goes up, it goes down. If the US dollar goes down, it goes up. Right now, where it is, I would expect this to be coming down this week at some point. Purely because I'm expecting US dollar strength. So we've got propulsion gaps on here on the 4-hour chart there, which have been tested and broke. We've got 4-hour propulsion on that flag that got tested twice. We've got this massive propulsion which got tested, which was the unemployment figures, and that is FOMC. I'm expecting that to be orphaned and not get back to it. However, unemployment, I reckon maybe we could. But whether this goes up or down this week is purely down to what happens with the unemployment figures on Friday. I don't know. Is the honest answer. Couldn't tell you. Like I just said, you're a new subscriber. There isn't anybody on this planet that can tell you which way this is going. It's going up or down. I can tell you 100% guaranteed there's a 50-50 shot of it going up or down through the next few days. How would I know? Sorry to burst the bubble, but I don't know. At the moment, we've just had a market structure reversal alert short. So there's your reverse alert short. So at the moment, the short sellers have started to step in. There's your end pattern reversal. So we're looking for a target to the downside, which is 125 ADR. We've also got these hourly targets to the downside. So this is where I'm expecting to come this week. However, we've also got these huge targets. So right now, gold, if I was going to choose any instrument not to trade, it would be gold. Because there is equal chance of it fulfilling one of these propulsions, and I don't know which. So like I've been saying all morning, get in short on this hourly reversal alert. If it goes down, take profit. If it goes up, add a second position. If it goes up, add a third position and wait for them to take profit and then get out. Yeah. Which way it goes is out of my control and irrelevant, and I don't care. So just get in. Get into it and get out of it when it gives you an exit. Yeah. Anybody could give me any instrument right now and I'll make money out of it. Because I will either get in and it will go the way I've done this in here before. Yeah. So what I've done is in live rooms, we've gone down to M5. I've said someone pick an instrument and someone picks, pound CAD. And then I say someone pick a direction. Someone goes long and I'll go long. Yeah. By the afternoon session, I'll have a profit. Or I'll be in drawdown on it, waiting. I don't know. I can't, I'm short on pound CAD at the moment. It's going up. If it gets up to there, I'll get in another position and wait for it to come down and then I'll get out. I'm hoping what it's going to do is test that propulsion gap and drop down and test these. But, so I mean, again, gold, which way is gold going? Which depends on which time frame you're trading. If you're trading M5 now, I would be going long. But I don't know how long you want to hold it for, 10 minutes or 10 days. That makes a massive difference to whether you press the buy or the sell. Right now, I would say you should have been selling it on Friday. Right now, I would probably say to sell, but I don't know. No one knows. I can't give financial advice. I'm not a financial advisor. All I can say is the market will go up and down and it will go sideways. But you can make money out of that, obviously. Pick a direction. I was a school. What? I was a school. Look great, but at the end, sell product, just make update, and they changed name. Tried to sell as Holy Grail. So there I lost not money in market, buying indicator. I don't quite understand, Ivan, your English, but what I can glean from that is that you are buying indicators and they change the name, make it the Holy Grail, and you buy it again and you just lose money buying indicators. Yeah. You are stuck in this cycle. You're stuck here. Watch this video. It's 7 minutes long. Change your life. It will stop you. Stop you buying indicators. Buy my indicators because they're brilliant. In fact, don't buy my indicators. Just buy my EA. If you buy my EA, you don't need anything else. Just buy the EA. Get everything else. Thanks for the follow, Jordan. Yeah, if you buy the EA, literally, the EA, all the EA does is what I've been harking on about all morning. It literally just goes, all right, let's sell it here and see if it goes down. No, all right, let's sell it again. All right, let's get out. Brilliant. Done. You don't need to know what the EA is doing. You can put this thing on your chart, right, and just let it do its thing. Don't have to think about it. Just let it trade because it knows what it's doing. I don't know what it's doing. I haven't looked at this. I don't look at it. Just look at it. I just look at that. It's lovely. At the moment, we will have weeks where it will be hideous. But at the moment, it's lovely. Another hell of a week of news, Franco. Yeah, big week news this week. It's going to be big. I've got a horrible feeling. Oh no, markets will be out of sync for a week. I've got a horrible feeling that we're going to get negative unemployment on Friday, and the US dollar is going to tank. We don't get. It's too positive. Look, interest rates have been going up and up and up. We've had two positive unemployments on a trot, and this is too good to be true. This is why we've got such a strong US dollar at the minute. This is too good to be true. But if we do get one, it's going to be lovely. And they've said that if unemployment is negative, that opens up the doors for higher interest rate hikes, which will take us up to 5.25 definitely, which means everybody will be buying that thing because it's the best thing to put your money in. Yeah, higher the interest rate, the better. Yeah, 4.75. That's going up. If that goes up, I just got this feeling it's it's like the odds, isn't it? We put our money on red twice. It's come in red twice. Right, I should go black now. It just seems, just get this feeling, but maybe not. I haven't got a clue. We'll see. If I knew which way it was going, I'd be putting 10 million on that direction. Which way is gold going, Dances? I know for sure that they're going to the wrappers. Yeah. I was watching, I love watching Below Deck. There's a series on TV called Below Deck, and there's lots of different variations of it. There's Below Deck Mediterranean, and there's the normal Below Deck, and there's a new one called Below Deck Sailing Yacht, which we just started watching as well. But we're watching one of the Below Decks, and they had an American footballer on there, yeah? And he had, obviously, massive chunky gold chain on, huge chunky gold chain. It's like proper, rapper gold chain type thing. Yeah, this sort of thing. But it was a proper one, not a cheap one. Yeah, and he went on the back of a jet ski being towed on one of those inflatables that, flies along and you get pummeled up in the air and stuff. And his chain fell off. And he came back and he was like livid. And one of the other blokes said, yeah, that was worth more than his house. And it fell off. So somewhere in the Mediterranean, at the bottom of the sea, somewhere off the coast of, it's off the coast of Greece, there's a gold chain worth, I don't know what his house is worth. He's an American footballer, so, a couple of million. So there's a couple of million quid's worth of gold chain. And I said to my wife, should we go on a holiday there? Maybe we'll go on a scuba diving holiday. But yeah, that's where gold's going, to the wrappers. Definitely. Can't do that. Whipping post. I'm 15 minutes behind the stream, so this comment is out of sync. Okay. Just wanted to say ATR includes gaps. ADR doesn't. Right. Okay. Yeah, no, that's a good point. So we were talking about ATR and the ATR indicator, which is what the ADR indicator uses, obviously, because it's the average true. This is the average true range of whatever you're looking at, time frame. ADR is only looking at the daily time frame. So gaps on ATR would be included in that, whereas with ADR, it depends on where the gap is, to be honest. But if there's a gap, not sure how accurate that is. However, what I would say is gaps have no relevance on ADR unless they're huge, which you don't get in Forex. We don't get gaps in Forex anymore. Market's too liquid. It's very rare we'll get an ADR gap. We used to get gaps at the weekends and stuff, yeah, and you just don't see them anymore. People were like, "Oh, I'm not holding over the weekend because it might gap." It just doesn't gap enough to warrant any kind of problem anymore. Too liquid a market, so I wouldn't even worry about it. And if you're worried about gaps, you're over leveraged. CAD Swiss is going now. Come on, let's go down now. Using an indicator is like picking your basketball shoe, choosing your tennis racket. Yeah, exactly. Doesn't matter which one you use. Yeah, if you're picking a tennis racket, all of them hit a ball. It's a good analogy, that. Doesn't matter which racket you use, which oscillator. I've shown this in here before, haven't I? But I mean, oscillators, this is why MT4 has these, yeah? ATR, put that on the chart. Bears Power, put that on the chart. CCI, MACD, stochastic. Yeah. These are all called oscillators. They all oscillate up and down. They're all used most of the time for mean reversion. You sell it, you buy it. You sell it, you buy it. MACD is a little bit different, but you sell it, you buy it. You buy it. you buy it. Doesn't matter which one you use, does it? Yeah. When you buy it, you're either going to be right or you're going to be wrong. Whether this is extended has nothing to do with whether price is going to do that or that. All it's doing is it's called a market condition indicator. It's telling you the current condition of the market. This is why I use the RSI, because if you look at the speed of this compared to all of these, this is so much slower to move. But when there is a strong price movement, we get an alert. When there's a strong price movement on stochastics, we get embedded badly. It's just nuts. Stochastics is the worst thing in the world. I built an indicator called the multi-time frame stochastic indicator. It's on the website. It's terrible. Don't buy it. It's awful. In fact, I should make this free. It's a strategy that I started to trade when all stochastics are extended. Yeah, get in, right? But what I've failed when I built this indicator and I was looking at the strategy, I was like, that sounds really good. But in theory, if M15 is extended, so will H1 be, and H4, and a daily. So just use a higher time frame. Multi-time frame indicator analysis is pointless. Pointless. I kind of knew that when I was building the indicator as well, but I thought I'll test it. And I proved myself right. So I don't use it. Stochastics. Love it. Too fast or too slow, depending on which you're trying to use, what you're trying to use it for. There are jobs, but for skilled labour, population has become stupid, so no jobs for them. Unemployment will be up, I think. Yeah, possibly. Corporate cutbacks of middle management staff. The trouble with unemployment figures is it's kind of a reactionary indicator. It's what we call a leading indicator, which is why it's on the bias scorecard. In the fact that it leads that. So when something happens to this, it affects that. And this is the leading indicator of that as well. Everything at the moment is all about interest rates because we're trying to get out of COVID and trying to stop a recession. But the trouble with unemployment is it's very hit and miss. And a 0.1 or 2 percentile change will send the market into absolute frenzy. Look at that. Yeah, that was a 0.2 differential. We were a 3.5. We were expecting a 0.1 differential up. We got a 0.1 differential down. Yeah, on the 3rd of February. And look at what happened to price. I mean, it just went nuts. Yeah, a 0.1 differential. But it's not because it was a positive figure. It's because we weren't expecting it to be. That's why we got this. It's not the figure itself. It's the fact that the figure is not expected. The market priced that in incorrectly. When the market prices in incorrectly, this is why we get these big news spikes. It's not the news itself. If the market had been pricing in unemployment to go down, the US dollar wouldn't have gone up like that. Or rather, gold wouldn't have gone up like that. Gold would have been going down. And then when we got that figure, it would have gone, yep, brilliant, we got it right. But what happened was we got it wrong. That's why it's so important and why it's red, because it's not the number, it's the impact it has on the other leading indicators that makes that so powerful. And it's nothing to do with this. You know, everyone, you're going to trade non-farm payroll. You're not. You're trading unemployment. Look at the time. Comes out at the same time. Yeah. This is what's moving it. That's bugger all. Who gives monkeys about the employment change of people that don't work in farms? It's nothing. It's not important. It is important, but it's not what moves it. Yeah. I even call it non-farm payroll. We're going to trade non-farm payroll. We're going to watch non-farm payroll. We're not. We're watching the unemployment figures, really. If there, you have to manage the equity. It's there, you have to manage the equity. I don't know what I was talking about then. Sorry, Ivan. Whatever I was talking about. something to do with managing equity. Yeah, there's no best indicator, but there's a best indicator that suits you. Exactly. Pick the indicators. And that's what the bootcamp's all about. Yeah, that's exactly what the bootcamp is all about. I have been out there. I have tried everything. I have been doing this for a long time. And this is my take on everything I've learnt. And basically, it's just don't bother. Don't bother learning. Just do. And don't bother about indicators. You got to use them. You got to have a reason to get in. Yeah. The reason I have the indicators is for this. The EA. The EA cannot execute an order without a rule set. I have to have a rule set to get into the market. But that rule set is mostly wrong. So is everybody else's. If you've got a 50% strike rate, you're wrong 50% of the time. Yeah. Best strategies in the world have got like 65% strike rates. Institutions around about 30 to 40% strike rate. Nothing to do with the strategy or the strike rate. It's to do with getting in and getting out and how you do it. I'd rather fish small than get the occasional big fish. Yeah, well, that is trending. Swing trading and big moves are you know, for looking good. Yeah. I post the results on the website. Yeah, the trades, which I've just started doing. Oh God, where the hell are they? It's probably under category, isn't it? I don't know how the website does it. Oh, there you go. So I just started posting all the results. I've only just started posting it. Just posting screenshots of all of the trades. But, you know, none of these are, there is no big trades in here. You won't ever find a big trade on these because these are just scalps at the end of the day, taken over a period of a couple of days. I'm in and out fast. If I set the EA to target, you know, I'm targeting, what am I targeting on this one? 0.3. Imagine if I set that to 1.5, so going for 1.5 ADR move, I would catch a huge swing. I'd probably be sitting in that trade for 5 times longer to show a screenshot of that. I could get in and out of it with that target 5 times. 5 times 0.3 is equivalent to 1.5. So why not? It's not equivalent, it's roughly. Why not get in and out and in and out and in and out rather than having to go in, wait, get out? I'd rather just get in and out lots of times and bank lots of times rather than wait for the big move. It's, you know, big moves are for glory. Yeah, showing the screenshot of, you know, it's all the same for Telegram and Discord. Hey, look at my huge trade. It says 10 to 1 winner. Well done. What do you want me to do? Round of applause? How much money have you made out of it? The same amount as I've made out of it. I just got in 5 times. You know, it's just like, doesn't matter. They're all right. Everybody's right. Everybody that makes money is right. How you make it is up to you. In the US, they are facing shortages in the unemployment because they literally don't want to work. It's exactly the same in the UK. So using common sense like Peter Lynch and predict job figures not reaching target. I know, I'm really, I'd love it to. I'd love it to. I'd love to see a strong US. I really would. Because it would confirm my bear market theory. But I've got, I don't know. The fact that we're not seeing any movement in these markets at the moment is what's slightly worrying. Yeah, we're not trending. We're stuck. We've got balance, price discovery, kind of going into a balance. Yeah, we're not trending. Not trending like we used to. Which kind of means the market's undecided on the US at the minute. We're not getting any solid figures, are we? It's mixed. It's red, green, red, green, red, green, red, green. So I reckon we're up for a red. I reckon we might get a 3.4, to be honest. I think they might not change, but I don't know. What do I know? I know nothing. If I knew, I would be a billionaire. Tarot card indicator, the one card reading. I did it and the trade won. Creepy. I can flip a coin and make money. You know, it doesn't matter, does it? I might try that tarot card reading. I'll tell you what, I did this yesterday. I went to this website yesterday. What's it called? Play 7? No, what's it called? There you go. Play7.com, right? No, it's not. Not them, sorry. No, what's it called? Oh, I don't know. But basically, I entered a competition. You know, there's these websites out there where you can, you know, you buy tickets and you win a Lamborghini. So I did this Lamborghini one last night. Didn't win, obviously. I really wanted to get the Lamborghini because then I could go out there and show pictures of me with my laptop with all my charts on it and sitting next to my Lamborghini. But I didn't win, unfortunately. But what was my point? I can't remember what my point was. Oh, yeah, tarot cards. But the way they drew it is that they basically use a random number generator. So they use this exact random number generator to pick the winners. So the Lamborghini, there was 219,000 tickets sold. I had 20 of them. And basically, all they do is they come on here and they go, right, ticket number 1, and the biggest ticket was 219,999. Okay, and they go, okay, and they go down a spreadsheet and go 133284. The winner is, it was a guy called Paul Cox won it last night, the Lamborghini. Well done, Paul. But that's it. But what you can do is very simply, if you want to decide whether or not you should buy or sell on Friday, do that. Sell. Buy. Tarot card. Doesn't matter what it comes out as. It's irrelevant. The reason for pressing that button. Totally irrelevant. No. On Friday, this is going to go up or down based on the news. Nothing else. We have no idea. So your chances are the same. That random number generator is just as good an indicator as the RSI, the market reverse alerts indicator, the ADR indicator. It's exactly the same thing. Picks a direction. Simples. People are not working because they are working on YouTube, TikTok, etc., earning money from the modern methods. Yeah. Oh, that's what I was going to do today, wasn't it? I totally forgot. I was going to use my YouTube earnings to try and compound an account. New Zealand Swiss ADR. That's good news. Keep going. Keep going. New Zealand Swiss ADR. So hopefully CAD Swiss is coming down. Lovely. Yeah, I was going to use my YouTube earnings, wasn't I, to try and compound an account. I forgot. I might do that this afternoon if I get time. $110. I'm going to do it. I'm going to put that $110 into an account and I'm going to risk 40 or what should I do? 50%, 30% per trade. See if we can compound it and double it just for fun. Hey, that might earn me another $110 on YouTube. What account size is needed for your EA to work? Any account. Doesn't matter. So the EA basically runs on risk. So you basically say, I want to risk a percentage of my balance. So whatever your account is, it will calculate the lot size for you based on your risk parameters. Doesn't matter. If you're going to position trade, you can't position trade really, I would say, with less than $5,000. You could do it with a smaller amount, possibly. Welcome aboard, Jordan. Didn't see your sub there, sorry. You could do it with less, probably. I don't know. I haven't tried. But the EA will run on a $100 account. It's just obviously it will only be taking 0.01 lot sizing. So with position trading, if you go and watch the bootcamp, one of the parts of position trading is scaling out. I'm just trying to find a trade. that has got drawdown control on it. I'm sure there was a trade with DD control. Let's go to all history. Oh, that is all history. Just trying to find something with a loss. There we go. New Zealand Swiss. That'll do. Oh no, that's not drawdown control. That hasn't done any drawdown control at all. But you do drawdown control basically. So the EA will scale out of positions. So if you took, for example, a 0.10 there, and it moved 1 ADR against you, what you could get the EA to do is start to close this position out. So we'll take a 0.03 loss there, and that now becomes a 0.07, and you basically bank that loss. And obviously you're entering positions as you go. So you're scaling out as the price pushes against you. So you pick a distance to start scaling out your positions based on your comfort levels. So for me, it's 0.75 ADR and it starts to scale out. I just haven't had any push far enough against me at the moment. But you'll get the odd loser in here. So you can't do drawdown control, partial drawdown control. If you're getting in with a 0.01 lot, you can't take part of 0.01 off. It's the minimum lot size. So you need to ideally trade with an account that starts at ideally 0.03 or above, because you need to be able to scale out of a third of the position if you get into a squeeze, which you will at some point. You will get a squeeze, but I don't know what the minimum account size is, to be honest. And this is something I get shot down for a lot in YouTube, in the Telegram channel. People say to me, can I trade with 500, or they'd say, I can't afford the indicator or the EA, it's $99, I can't afford the EA, can you do a discount? Well, if you haven't got $99, what the hell are you going to trade with? Sorry. And you know, I've got some indicators which are $49. People are like, I can't afford $49, I really want the indicator. What for? What are you going to trade with? Fresh air? You're starting a business and you want to earn 6 figures a year and you haven't got any money. Good luck. It's exactly the same as opening a shop. You're going to need to fit your shop out. It's going to cost you 50 grand to start. You want to get a 6-figure income from something with no capital. Can't do it. Yes, I understand people want to try and start with small balances, but you can't position trade with a tiny balance. You're only going to get, your average return is going to be somewhere in the region of, on a good month, a really good month, 15 to 25%. On a great month. Average month for me is somewhere between 10 to 15%. But on a 30K account, that pays the mortgage. On a 100K account, that makes me 6 figures a year. If you have a 10K account, you can trade that like a 30K account to grow it. But don't try and compound it. Don't go in with stupid risk, 1% a trade and things like that. You will get lucky runs. You'll get, if you went in, for example, here, if you went in, and let's look at the ADR reversals because it's better. If you went in here, right, I'm going in with 0.2% risk per trade. If you went in with 1% risk, yeah, over the last 4 weeks, you would have over 100 grand. And you would have gone into a maximum of 5 times 5. You'd have gone into 17.5% drawdown on your account, but you'd have made 100K in a month. But another month, you'd have blown the account because you're over leveraged. So I can't really answer the question on account size. All I would say is if you haven't got any money, don't become a trader. Unless you're going to go prop. If you're going to go prop, position trading is difficult because you've got too tight risks. You can only lose 5% of your account. Guess what? I think there is a higher chance of succeeding in Forex market than becoming influencers. I think you're right. maximum I can ever get in here is about 80 people. And that's only recently. I'm not an influencer. That's for sure. I do influence people, but I'm not an influencer. You know, influencers, if you know, when you've made it on YouTube, because all you do is you get brokerages phoning you up or emailing you all the time going, can you promote our brokerage? No, I hate you. I hate you, broker. I can't promote you because I hate you. You steal my money. We used to. You don't anymore. Does every now and again, doesn't he? But full margin, yeah. 500 to 1 leverage for position trading, or 200 to 1 leverage. A decent leverage account. You can't position trade with 30 to 1 either. Too small. It's getting on 3 hours. Yeah, I need to go and rest. I've got to do a live room in 2 hours. I'll be back at 2:20. Just waffling today, aren't I? It's a trouble when you get lots of people in the room. It's not a trouble, but you get lots of people in the room. They ask lots of questions. Answer lots of questions. That sends me off on lots of answers. But anyway, creative industry is the toughest. Yeah, I bet it is. I don't know. I just trade, so I'm not. This is not my money, is it? I don't make money on YouTube, as I've said. But I will try. You know, I can make money out of YouTube, but only by getting paid a very small amount each month, and then compounding that. So that's what we'll try and do. I'm going to compound my account. I'll probably fail because I'm useless at compounding. That's why I don't do it. I don't know anybody that can compound and make money regularly. So, but we'll have a go, shall we? I'll get the account set up. Right, I better go because like it's just been pointed out, I've got another live room to do at 2:20 this afternoon. So I'll be back for the New York session. We'll trade the DAX, the NASDAQ. And we'll have a look at the FX pairs. So the ADRs we've got today are all Swiss franc based. Obviously, as you can see, the Swiss franc has moved based on the news, which is the CPI figures. So we should have positive Swiss franc movement. Some of the Swissies are pulling back. US dollar Swiss, as you can see, is one of them. I'm on the CAD Swiss short, which unfortunately is linked to the US dollar a lot of the time. So that's struggling at the minute. But if we get the US dollar start to weaken, we'll get that nice drop and I'll get that Swiss down to ADR. If I can get an ADR on that, that puts that over there, which makes that 500, which means I've passed that evaluation. So this is only a little 10K evaluation I'm doing for Fiddle Crest to test them out. So those are all your ADR reversals, but be careful what you are trading against the movement or the expected movement of the market, which is the Swiss franc to be strong. Euro New Zealand is the other one you've got available as well. That's a nice ADR hit to the upside. I'm already short. I got in short. It's still pushing up, so I get in again. Again, got in short on the M5 reversal alert there. We are just probably going to invalidate that high, so you'll have a new reversal alert put in there, which is pretty much the same level. So I'll wait for that to push up and add into that if I need to, and obviously when it comes down, it'll come down. So yeah, I'll be back 2:20 this afternoon for the New York session, and obviously I'll be back tomorrow morning at 7:50, same time, so I'm always here in the morning and for the afternoon. If you need anything, come in the Telegram group. I promise I will answer and not shout at you. But I'm in the Telegram group all day long, answering questions and stuff. So, and obviously back this afternoon. So have a good morning. Hopefully it's profitable. DAX has been an absolute nightmare, not made any money. So what can you do with Mr. John Wick? But yeah, we'll hopefully get some movement out of the NASDAQ this afternoon because the markets this morning have been quiet. So, all right, have a good one, guys. I'll be back this afternoon, 2:20, and hopefully I will see you then.